Yeah. Look, disclosures, transparency will always help to calm and reassure investors. Just whether or not we'll get that and at what kind of standard is still to be seen.
OK, Sinead, thank you very much. Sinead Cruz, editor of Bloomberg's Going Private newsletter, which is published twice a week. You can head to bloomberg.com/newsletters to subscribe. There you go. Information on your screen about that. I mean, maybe we get to go back to talking about private credit now, and we get to talk about AI and all the other things we talked about in January and February. I'm finding it difficult to remember what we talked about in January and February.
I think you just nailed it.
Those things.
AI and private credit.
Gold, a lot.
There was a lot of gold. Gold seems to have definitely faded off the agenda, but AI seems to be back.
And the dollar has rethought recent gains, so that's in keeping with a move back to January, February, isn't it? 8:26 here in London. When we come back, we will focus back in on the energy markets. Is it too early to sound the all clear? We still have closure of the Strait of Hormuz. Well, almost. I mean, some vessels are now getting through, but blockades on both sides still in place. We'll be joined by Emily Ashford, Head of Energy Research at Standard Chartered Bank, to discuss the latest on the Middle East. That's next. This is Bloomberg.
The problem we've got as an industry is when the governments overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back, everybody. This is the opening trade, the middle of the week, and this is where we are, 30 minutes into today's session. We are entirely flat on the Stock 600, but that really does hide some really interesting developments. There's a couple of themes that we're trading around here. One is trying to move on from what's been a huge focus on the Middle East, rightly, over the last 6 weeks or so. The other is factoring in some earnings stories, and you see both of these demonstrated here on this board. The FTSE and the DAX trying their best to move on. Not a huge amount of earnings stories coming out of those markets today. The CAC 40, though, weighed down by certainly what we hear going out of the luxury sector. And that does link back to Iran, but the CAC Iran down by 0.6%. Hermes in particular, one of the big fallers there. Guy, that's the overall picture on markets. Not really telling the interesting stories beneath, but there are some.
There are. This is a market that's fairly balanced this morning. So 319 up, 258 sort of down. Reasonably balanced, let's call it that. But what is interesting once again is the volume picture. Very focused volume in terms of the buying over the last few days, which tells you a lot about what is maybe happening here in terms of the repositioning this market is doing and who is doing it. Is it the CTAs? Is it the short squeeze that we've been talking about? Is that what has been driving this repositioning? Is fundamental money actually convinced that this rally has legs? And I question that, judging by some of the notes that I'm reading at the moment. Let's talk about what we're seeing in terms of some of the leaders and the laggards. What we are getting this morning is a positive picture out of Rio. The metals market still looks fairly solid at the moment. Novo, the farmers are really on the front foot this morning, which again I think is really interesting in terms of where markets are repositioning to. Extron out with numbers, and that stock is definitely being rewarded very strongly, up by 13.1%. The downside, Anna's already mentioned it, the luxury space is under significant pressure. You can see it from Burberry down 3% to Kering, which is down by 8.5%, to Hermes, which is down by 12%. You haven't seen a move like this for nearly 20 years in Hermes. You haven't seen this for such a long time. Hermes feels like maybe the incredible run that it's had is beginning to run out of steam, Anna.
Guy, let's get up to date with some of the other stories that we are covering then this morning. Vice President J.D. Vance has pushed back on the Pope's criticism of the war in Iran. Last week, Pope Leo said anyone who is a disciple of Christ, the Prince of Peace, is never on the side of those who once wielded the sword and today drop bombs. Vance, who himself is a Catholic, said that the pontiff should be, quote, careful with his words. Bloomberg understands Anthropic has received several offers from investors for a new funding round that could value it at more than $800 billion or higher. The offers would more than double the $350 billion pre-money valuation that Anthropic had attached to its $30 billion fundraising in February. Bloomberg previously reported the company has discussed a public listing as soon as October. And U.S. Treasury Secretary Scott Bessent says President Trump's tariffs may be restored by July to the levels in place before the Supreme Court struck down many of his levies. Speaking at a Wall Street Journal event in Washington, Bessent said the administration is seeking to implement or conduct Section 301 investigations, including probes into other nations' industrial overcapacity and forced labor practice. These, he indicated, could give the U.S. cause to implement new tariffs.
Okay. Let's get back and talk about what is happening in reaction to all of this and oil prices. Let's take a look at what is happening here. So oil prices currently are up a little bit. You've got the US contract up a little bit more. Brent is on the move this morning. But relative to recent moves, we are seeing something that is reasonably stable. Elsewhere, markets are definitely trying to move on. Can the oil market move on? And what is happening, particularly at the front end and at prompt delivery? The US and Iran apparently seeking further ceasefire talks, though I haven't actually heard much from Iran on that front over the last few days. The blockage in the Strait of Hormuz is continuing and continues to impede energy supplies. Emily Ashford, head of energy research at Standard Chartered, joining us now to discuss. Emily, the rest of the financial markets seem to want to move on from this war. Is the oil market moving on from this war and this blockade?
Not quite yet, Guy. We've seen a slight lull in bombardment from both sides, and we have this cautious and fragile ceasefire that's remaining in place. And I think despite the failure of the first round of talks to generate a notable shift in position for either side, even just getting those two parties in the same room is an achievement. We're taking a bit of comfort from the idea that we could see further talks in the coming days before this 2-week ceasefire expires. There are still several negotiating points, which I think both sides are at odds. The most critical to the energy market, as you mentioned, is the opening of the Strait of Hormuz. And that means opening with no tariffs, no naval escorts, no mines, and no risks to vessels. And I think the market is still a little confused over the logistics of this new secondary US blockade and really its strategic motive, because tightening energy supplies even further well, that will mean higher prices for both crude and refined products. And that correlation between US gasoline prices and then the domestic backlash that we've seen to the conflict has been clear for the past several weeks. But in terms of the Strait of Hormuz, at the moment, what the market is doing is we are all watching individual vessels on marine tracking apps. One yesterday that appeared to transit and then turned back. And then we had a headline that Iran was said to be considering a pause in its own transits, which would then remove the transit of Iranian crude as well, an extra 1.5 to 1.8 million barrels a day from global supply. And then this morning, we've had another news story that a tanker has entered the strait and made it to Iranian waters. But I would say on balance, it's a slight optimism about further talks that is really keeping the market sitting around $95 for Brent at the moment.
Emily, if I want a barrel of oil now, how much is it going to cost me?
It's a very good question. We have seen a disconnect between the physical market for barrels, if we look at, say, dated Brent, for example, and then the financial market. And I think that might be one of the reasons why the physical market is still in panic, but the financial market shows a little bit more caution, I think, cautious optimism. If we're looking at barrels, if you wanted to obtain a barrel in the market, and one of the questions that I've been asked a lot recently has been about alternate sources of supply. And we saw a headline yesterday from President Trump talking about increasing UK oil production and the North Sea. And there seems to be a little bit of confusion as to where barrels can be brought online very quickly. Most of that is really just from strategic reserves, and where we will see a gradual increase over time, because obviously higher prices does tend to lead to higher production outside the Gulf. But if you really want to obtain a barrel of oil at the moment, your best bet is probably going and looking from a barrel coming from a strategic reserve.
Emily, good morning. Can we say that we won't see shortages of anything in Europe related to the Strait of Hormuz in the energy arena? Will we see any shortages going into the summer, even if we do see gradual reopening of the strait?
Yeah, the only balance that we have to tighter supply is to reduce demand. So that is becoming increasingly evident. The IEA published a report yesterday suggesting that the Q2 demand drop will need to be on the scale of the COVID-related drop that we had in 2020. So we have tight crude supplies, tight feedstock supplies, and that means that we're seeing refiners, petrochemical producers curtailing their operating rates, particularly in Asia. And then on the other side, we're seeing flight cancellations, reducing jet demand. And remember that it was jet that saw the most acute price rises. And then governments have two ways that they can then reduce demand, either policies to reduce consumption or mechanisms to shield consumers from those wholesale prices. And to date, at least 43 countries have announced those measures. But really, only the opening of the strait is going to prevent the most acute effects of energy supply loss and price escalation from spreading globally and then impacting the global economy.
I mean, that sounds like a huge ask, Emily, to reduce demand on the scale that we saw in COVID. Is that really what anybody is expecting? Or do we end up in a place where we just see some increase in exports from the Strait of Hormuz and then demand does not need to fall that far? Because that sounds pretty devastating.
Well, we've got a huge logistical lag that will be associated with this as well. When we finally have the strait opening, vessels will be in the wrong locations. We've had shut-in supply from Gulf producers as well, so even getting that back on stream is going to take a long time. The idea that once the conflict ends, we will see a rapid return to normality, I think is wrong. And also, I think we're going to see a change in market behavior as well. There will be two key themes, in my view, energy security and optionality. So a longer-term pivot in focus towards resource nationalism, maybe even hoarding. And that isn't just the replenishment of strategic reserves, but a new wave of stock building of both crude and refined products. And I think the conflict has also exposed the absence of optionality from both the upstream to the downstream. So I think we're going to see alternate offtake routes being explored. Most Gulf producers are unlikely to ever want to give Iran this much control over both global supply and the price of energy ever again, or to be exposed so significantly to just one single choke point.
Yep, it's going to take a while to fix that, maybe, though. Just on the strategic reserve front, how much is left? Like, if I want to borrow on that, you said earlier I have to go to a strategic reserve. How much more can those reserves be drawn down without causing structural problems to the storage facilities, particularly in the United States? Yeah. If I want to rebuild them, presumably there's going to be extra demand afterwards as well. Just talk me through the kind of the process that is underway at the moment, and when that process kind of runs out of road.
Yeah, gradual withdrawals from strategic reserves. So we're not going to see 400 million barrels just put on the market on one day. And different reserves have different drawdown rates, the most rapid being the Strategic Petroleum Reserve. But other countries have more constrained rates there. And as you said, there are structural issues. So you can only withdraw a certain amount, particularly from the SPR, before you have to maintain an operational minimum level, or get an act of Congress as well to reduce volumes. And I think once the US removes its 172 million barrels, which is what it promised for those reserves, it is at that point. So I think removing any further from the SPR, once we see that drawn down, is limited. The one big reserve which is opaque and we're not entirely sure how much is in it or how much is being drawn down is China's reserves, estimated about 1.2 to 1.4 million barrels there. So China itself has been relatively well insulated from this whole situation with its strategic reserves. But that is the best repository of spare barrels in the market at the moment.
Yes, and so there's then some doubt as to whether the effect of this will be that China puts pressure on Iran or not. We will watch that one. I wonder, you mentioned earlier, Emily, that everybody in the industry is watching these various vessels and how much progress they make. We heard from the Americans yesterday that they said they successfully turned back 6 who'd been trying to leave the Strait. We're today watching the Agios Fanorios, the first, which is not sanctioned. It's not Iran bound. It's heading to Basra, we understand. Is this the kind of thing that we should be watching to see the Iranian reaction function? Because if the Iranians don't seem to take any action against these vessels, and they can get in through Iranian waters, as they seem to be attempting to do, and crucially out again, that has to be a good positive sign, I suppose.
Yeah, I agree. I think there were a couple of risks to obviously this escalation with the blockade and two critical ones for this. The deployment of more military vessels in the Strait, I think, obviously increases the operational risk of an incident that could even broaden maritime tensions outside the Gulf. And the second is whether or not vessels can transit. We still have potentially inspections or associated rise in freight and insurance costs. So watching this one vessel this morning that has gone into the Gulf, perhaps the US blockade doesn't see that as an export of Iranian crude, and so that is maybe why it's been allowed through. I doubt it's been able to get through covertly. The amount of focus on that area will be extreme at the moment. So yes, you're right. Maybe this is another thing that's giving the market a little bit of optimism that it's not quite every single vessel being stopped and that increased risk that we could see some sort of incident escalating again.
Yes, so the Agios seems to be Iraq-bound, and you referenced there, Emily, another vessel that the Iranians have said managed to get into their waters, but we will, yes, watch how it behaves and whether it manages to get out again. Emily Ashford, Head of Energy Research at Standard Chartered, thank you very much for your time this morning. 8:44 here in London. Coming up, a mixed bag for Wall Street banks as JP Morgan and Citi post record quarterly results. But Wells Fargo misses. We will look back and then forwards when it comes to the US banking story. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
The Wells CFO speaking to us yesterday. We're in the midst now, firmly in the midst of US bank reporting. Wells, a little bit of a wobble, you could argue, maybe yesterday. What is happening with the consumer? They're probably much more exposed than maybe some of the other banks. But the basic picture coming out of the US banking sector continues to be fairly solid. In some ways, kind of quarter on quarter, there's a bit of volatility in there. JPM, there's bits of that business that look kind of okay. There's bits that look fantastic. Look at trading. Look at what is happening there. Bella Farr, who leads our finance coverage here in London, joins us now. So it's pretty positive for JPM, pretty positive for Citi. We'll come on to Wells in just a moment. But trading's really good.
Yeah.
And really good.
It's kind of ridiculously good. I mean, you saw... I think JP Morgan had record equities trading. They had, their second best FICC trading quarter, and they had record trading across the board. So clearly, I don't need to remind you that a lot has happened over the last 3 months through the end of March. Yeah. But that volatility definitely worked in their favor, right? They were able to reap the rewards from it for sure.
Yes, and we certainly saw that at some of those banks that did pretty well. Even the ones whose share prices maybe didn't reward that. We saw some incredible trading figures. What happened to Wells Fargo then? Something different, a different story entirely, it seemed, for the markets.
Yeah, so Wells Fargo missed estimates on both net interest income and non-interest income, right? So two key metrics that obviously analysts are always looking at, and especially for Wells Fargo that had kind of a key restriction from the U.S. lifted last year. So analysts are eyeing growth, right? And I think the question for Wells is, can they prolong this in the long, can they prolong this if volatility continues? If the U.S. consumer, starts to feel more pain at the gas pump, like you heard from the CFO earlier, will they be able to, sustain net interest income, or are they going to, be hurt by the fact that they are just not spending as much?
Yeah, it was interesting. The loan story coming out of JPM I thought was quite interesting as well, but we'll come back to that maybe a little bit later. B of A's out later. Morgan Stanley's out a little bit later. Does the theme continue?
Yeah, so I'll start with Morgan Stanley. definitely expecting at least equities trading to be in line with the rest of the banks. I think it would be kind of a shock if something went awry there. But I think there will definitely be questions around private credit, which is something that all of the banks were asked about. I think, you know, I was blogging JP Morgan's earnings yesterday. I think they were asked 3 or 4 times, maybe 5. So I think, but in terms of trading revenue, you know, I don't think that they're expecting records on Morgan Stanley too. With Bank of America, they are expected a 6.5% rise in net interest income, which will be a big kind of boon for the bank. Again, I think all the questions will be around the consumer in the long term and whether, you know, they start pulling back on spending or, you know, they start to, their other parts of their businesses start to feel some of the hurt.
The doom and gloom that's coming out of things like you mentioned, things like that, kind of actually become a reality. Actually, I think we're getting retail sales coming up, so maybe we'll get a better read on the consumer out of the US over the next few days. Aside from the banks, Bella, nice to see you. Thanks for stopping by to see us. Bella Farr, who leads our finance coverage here in London. Let's talk about some of the European banks. The CEO of Commerzbank says she has had talks with UniCredit about a deal. This after the Italian bank announced the takeover bid, of course, for the German lender. But Bettina Orlop says the companies are still at odds over what the right valuation actually is.
We have constructive dialogues, at least from our perspective, since the beginning of the journey, so since September 2024, because UniCredit is an investor, an important investor, now the largest investor also, and we take that into account. So we had every quarter, we had bilaterals between the two institutions where we actually answered all questions UniCredit had, and we did not take up any feedback when it comes to our own strategy or to potential collaboration or something like that. And we always stated that we would be open for a dialogue when we see potential terms, potential ideas of a business combination agreement. And what happened after the announcement of the takeover offer is that we had some talks, some interactions about a potential business combination agreement. But for the time being, it's very clear that our opinions differ quite a lot, starting with the valuation of the two companies and to the banks and the exchange ratio. And there are also some disagreement, I would say, about the potential future business model.
That was Bettina Orlop, CEO of Commerzbank, of course, talking about the different views on the value of that business provided by her management and that of UniCredit. Let's look at some of the events that are on the horizon for today's trading day. The IMF meetings carry on over in Washington. We have the bank earnings story out of the US that we've already discussed. The Bank of England's Bailey, the ECB's Schnabel, and other ECB voices will be speaking. There's basically a lot of focus in Washington of, I don't know what the collective noun for all of those finance professionals is, but there's lots of them in Washington this week.
I could have thoughts on that.
Yes, central bankers and finance ministers. We'll also hear from the Fed, of course, and it's the Fed's beige book. Let us think about what comes up next.
It's tax day, apparently, in America, which apparently is generally quite a negative day for equities, but yesterday was amazingly strong. Apparently, we've moved past the war, back to AI. That's fantastic. Can it last? Well, let's try and find out. Skylar's here. Can it last?
I mean, today, as you say, is a more negative day. This is work done by my colleague Simon White, and he looked at returns across every day, and today is, on average, the worst day of the year for the S&P. Now, generally, I wouldn't put a lot of weight behind seasonality unless there's a reason, but there's a very good reason for it in the fact that it's U.S. tax day. So people take out of the money out of the market to pay their taxes off. So that's more of a negative signal, but I think sentiment on average is quite positive still.
Well, yeah, and sentiment is quite positive because the market seems to be trying. The European story this morning seems to be we're trying on the one hand to look past what's going on in Iran. We have Brent almost entirely flat at 94.75. And yet the earnings story isn't helping us make move to the upside because of some of the luxury names. I mean, how are you summing up where we are in markets right now then, Skylar?
Yeah, it's really interesting because I think the market is just kind of pushing out negativity in terms of, yes, some of the earnings haven't been great today. And I think, you know, markets can definitely look through into optimism if they're meant to be a resolution. And so the earnings aren't as bad maybe 2 quarters out. But if you actually look at first quarter and second quarter earnings, you might not see the negativity from higher energy prices in the first quarter. So first quarter Euro stocks EPS expectations are pretty flat, and 2Q's actually been revised up. And there are two two things when you look at a sector level happening kind of under the surface. The first is there's definitely more optimism priced into energy than negativity that's been priced elsewhere. So energy is meant to be very strong EPS upgrades since the Iran war began. And then the second impact is much of the impact that's actually being priced, even if not to the levels that I think is necessary, is in the second quarter, not the first quarter. So travel, for example, you've seen strong upgrades for first quarter EPS, but second quarter EPS is where you've seen the downgrade. So it may be that we have to wait till the second quarter earnings season to see that stagflationary impact.
Skylar, thank you very much. Skylar Montgomery-Coney from the Bloomberg Markets Live team. And that said, Guy, US futures flat to negative. So looking for another driver for the markets conversation, it would seem, over in the States.
Yeah, we've got to pay the tax bill first. So maybe that's
it.
Why.
Nobody wants to do anything today.
Just pay the taxes, move on, and kind of... Then we'll figure out what happens next.
Listen to what some bank bosses have to say later, which will certainly be part of the conversation. And there'll be plenty of messaging coming from those IMF spring meetings as well. Kristalina Georgieva will be joining, of course, from the IMF. We'll also be hearing from Joachim Nagel over at the Bundesbank. So, of course, lots of conversations to come from the IMF events over in Washington. That is it for the opening trade. I'll be back with the Pulse shortly. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
European stocks and US futures tread water as investors downplay tensions in the Strait of Hormuz, turning their focus to a potential second round of US-Iran talks. Hermes plunges the most on record after disappointing first quarter sales, while Kering slides on weaker than expected performance at Gucci. And ASML lifts its full-year sales outlook as booming AI demand drives orders at Europe's most valuable company. Welcome to the Pulse, everybody. Let's have a look at what's happening on these markets then. We've got a host of assets for you. The Stocks Europe 600, as we said in the headlines, almost entirely flat as we try to move on what's happening in the Middle East. But focus on earnings doesn't help because Hermes is down by nearly 13% as a result of the earnings story. S&P futures also, as we mentioned in the headlines, looking pretty flat, looking for a new narrative. We've got the ongoing bank earnings story coming through in the United States. Maybe that will provide it. Brent crude, 94.85, but pretty flat, actually, underscoring the fact that the markets are trying to move through what is happening in the Middle East right now. Let's see if that makes sense to our guests this morning. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, in for Francine Lacroix this morning. Now, Bloomberg has learned that the US and Iran are looking to arrange a second round of peace talks in the coming days, with one proposal to return to Pakistan. In a Fox Business interview, President Trump reiterated he sees the war nearing its end.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Meanwhile, in Washington, Israel and Lebanon began negotiations to halt a war with Hezbollah. Secretary of State Marco Rubio hoping the talks would set them on the path towards lasting security.
All of the complexities of this matter are not going to be resolved in the next 6 hours, but we can begin to move forward to create the framework where something can happen, something very positive, something very permanent, so that the people of Lebanon can have the kind of future they deserve, and so that the people of Israel can live without fear of being struck by rocket attacks.
Let's bring into the conversation Bloomberg Horizons anchor Jumana Basechi, who is, of course, in Dubai for us. Jumana, so another day where we're talking about talks and looking ahead with expectation and hope that there will be another round of these peace talks before the ceasefire expires. How optimistic should we be?
Yeah, that's right. And President Trump himself is talking up the prospect of those talks occurring at some point. And he said in the next couple of days, in multiple interviews that he's given to journalists and phone calls over the last 24 hours, he also told ABC that something amazing, quote unquote, could happen in the next 2 days. And in that little bit of the interview from Fox Business, he also suggested that the war is ready to be wound down, or beginning the process, the wind down process of the war. So hinting that perhaps the U.S. are very keen to move forward with the second round of negotiations. Now, I will just say that there has been a lot of speculation as to where and who would host these talks. Islamabad would have been the obvious choice, though we've just got notice now from the Pakistani Foreign Ministry saying that the Prime Minister, alongside the Foreign Minister, will be making a 3-day trip around the region the next couple of days, from April 15th to April 18th. They'll be touring Qatar, Turkey, and Saudi Arabia. So if indeed Islamabad is planning on hosting the next round of discussions, unlikely that it's going to happen before April the 18th. That's the new information that we have. But of course, other countries have put their hands up and said that they're ready to mediate as well, including the likes of Switzerland, which in the past has held multiple rounds of discussions. Now, the important thing here that I need to mention is we have not yet heard from the Iranian side, Anna. They've been very quiet, very low-key. The latest we've heard is from the president, Pezeshkian, yesterday, saying that they would be inclined to continue with negotiations so long as they are conducted under the quote-unquote international framework of law. So read that as you will. And some people are saying that perhaps because they're being less hostile than usual, at least on social media, and some of the messaging that's coming through could be construed to be constructive and laying the foundation for that next round of talks.
And Jemana, we began this week with two overlapping blockades, it seemed, in the Strait of Hormuz, one by the Iranians and one by the Americans. What is the latest on how the US naval blockade is playing out? We've seen reports, that from the Iranians that they say that one Iranian-backed ship has actually made it into the Gulf. We're seeing other reports that a ship bound for Iraq has made it in, and that maybe is less surprising. What are we hearing then as to how open or otherwise the strait is?
Yeah. All of us are moonlighting as sort of shipping tracking experts now, but it is a valid point. And let me just say that CENTCOM put out an update this morning saying that their blockade so far has been successful, and this was about 36 hours since it came into effect. They say that 6 merchant vessels had to turn away on back of their instructions, but there has been minimal activity overnight. And remember, yesterday we were tracking the movements of this vessel, the ship, the Rich Story, which made it through the Strait of Hormuz. But it appears to be the case now that it stopped and it turned off its signaling. Unclear really where its final destination is. And Iranian state media just a couple of hours ago are suggesting that one of their own ships is defying the blockade and attempting to make their way through the Strait of Hormuz. From our own analysis, we believe that this is a vessel called the Alicia that is sailing very close to the Rich Story vessel that I just mentioned now. So we're going to keep an eye on that and to see whether or not it actually does make it through the strait. And then reportedly, unrelated to Iran, but there is an Iraqi vessel making the way westward, coming through. So this would be the first of westward type movement that we see in a couple of days that is heading towards Iraq to load up. And they've said that their final destination is Vietnam. So there is a little bit of activity, I would say. But ultimately, we are very, very far away from the level of activity that we saw before the war started, when 100 to 120 ships would pass through a day. Now we're micromanaging and watching 1 to 2 vessels to see really how effective this blockade actually is.
Yeah, and many of them seem to be hugging, as requested by Iran, to the Iranian side to avoid what might be mined waters. Still a lack of clarity on that around Oman. Thank you very much, Jemana. Bloomberg Horizons anchor Jemana Baseji. On to matters central banking, and the ECB President Christine Lagarde says reaching a settlement to the war is in the best interest of the global economy. In an exclusive interview with Bloomberg, Christine Lagarde also discussed how the prolonged conflict has weighed on her outlook for growth and inflation.
I have seen successful program being completely wiped out by war. So war is, in any circumstances, the worst outcome. If you talk in strict economic terms and the movement of goods and all that, it's the Strait of Hormuz not being open for shipping and transportation, because you have 20% of gas and oil going through that, as well as the like of ingredients necessary for fertilizers, ingredients necessary for microchips, and what have you, not going through the strait.
So what's the pain threshold for the euro area economy that the ECB would have to act on? Is it inflation at 3-4%, or is it?
Look, we have forecasts for inflation that vary between 2.6, which is the baseline that we have, and a little north of 4%. Based on what I told you earlier, which is see-through, strong, decisive reaction, or somewhere in between, depending on the factors that we see, we will adjust. Because we will be agile, but one thing for sure is that we will keep our 2%.
Madame Lagarde, how worried are you about the discrepancy between spot and future oil prices, and so potentially tighter markets that we're pricing in?
I think it's the whole dilemma that we have about short term and medium term. And the more anxious and worried economic actors are about the resolution of this crisis, the more pressure there will be on the spot market.
How much do you blame the U.S. administration for what's happening to the European economy?
It's not my job to do, blame, to point finger or to associate this or that with blame. I'm more in the hope section myself, and I very much hope that people can sit at the table, can come to their sense, and understand that it will be in the best interest of the global economy, of the people, that a war settlement is reached, and that not just a ceasefire, and that we can navigate through the straits of the world.
That was the ECB President Christine Lagarde, of course, speaking exclusively with Bloomberg's Francine Lacroix in Washington. Now, European markets are broadly flat this morning as earnings have been rolling in. Geopolitics remains in focus as the US and Iran aim to hold more discussions. Let's bring in a voice from the markets, then Laurent Ramsey, who's managing partner at the Pictet Group and chairman of Pictet Asset Management. And very nice it is to see you this morning, Laurent. Thank you for joining us. I wonder then, when you talk to clients and you engage with them in conversation about markets, how much is everything still about war in the Middle East, or is there space for other investment narratives to be expressed?
I think we see our job as managing long-term savings on behalf of our clients, whether it is for a pension plan or for a high net worth. So our job at the moment is to try to look far, to look ahead, to try to weather the storm, rather than try to anticipate what markets are going to do tomorrow. I think these markets are extremely difficult to trade day in, day out. You don't know what's the next news is going to be, what the next surprise is going to be. So we try to talk to them about and remind them about what their objectives are. And try to stick to those. Yes. So at the moment we're sitting tight. We've cut risks. We went more defensive, and we'll weather that storm like we've weathered storms in the past.
Yes, and we see markets then trying to move past the Iran narrative, trying to put this behind us, even though the Strait of Hormuz is largely still blocked. You've reduced risk. Is it now time to put that risk back on, or is it too early for that conversation?
I think it's too early. I think the volatility and uncertainty which is in the market is bound to make you make wrong decisions. So again, we're sitting it out for the moment.
Sitting it out. I mean, we've seen a lot of markets around the world actually reclaim the highs they were at before the war started. So that's the case with some of the Asian markets, in Taiwan, Singapore, in China. It's also the case with the S&P. It's not the case in Europe. So how much do you lean into Europe or away from Europe at this point?
But at the moment, we're neutral equities. We're neutral regionally speaking as well. We're slightly overweight in healthcare, in utilities. We like tech. So we don't have any marked, regional bets at the moment.
I wonder what you think's at stake for the global economy then. We were listening to the Citadel founder and CEO Ken Griffin, who was speaking at the Semaphore World Economy 2026 Summit. He's been giving his view on what this means for the global economy. Let's listen.
We have a classic energy price shock unfolding across the world as we speak. That, of course, will create demand destruction. It will cause economies across the world to decelerate. The risk of a recession has increased. And central banks are making some really difficult decisions. This really is a very, very treacherous moment for the world economy.
So Ken Griffin there saying this is a treacherous moment then for the world economy. And I wonder if we've seen the full extent of that, Laurent, or whether that is still to come. Because it seems tempting, looking at markets trying to move on, to conclude, oh, well, the worst didn't happen. But maybe, aside from the humanitarian story, of course, I'm thinking for markets. But maybe the tightness or supply constraints or shortages for Europe, particularly, maybe they're still ahead of us. Where are we through this story, do you think?
Yeah, we think that the risk is more on the growth side than it is on the inflationary side. And the longer the Strait of Hormuz stays closed, the more this risk, increases. If you consider there are 4.2 billion barrels of reserves, and that 25% of those reserves are accessible, and that we lack 12 million barrels a day, more or less, out of 20. 8 can be redirected through the East-West pipeline and other means. That gives us until the end of May before we really have a severe shortage. So I think the faster we can resolve the crisis, the faster we can reopen the strait, the better. But there's definitely a risk of recession looming ahead.
There is a risk of recession then. That's not your base case, though, I assume?
So our base case, we give it a 40% probability that that will be there.
So if the big risk is growth, not inflation, does that mean the bond markets are front and centre? Is that an important part of portfolios at this point?
It is. Again, as I said, at the moment we are neutral on bonds. We've cut our exposure to credits. We're neutral on treasuries. So yeah.
Yeah. What about when you talk to wealthy clients and thinking about wealth management for those in the Middle East? I mean, has there been a lot of? Is it your experience that money in the Middle East has been trying to find homes elsewhere, or what's the story there?
Yeah, I think it's a good question. I think in general, wealth is mobile, and we've moved from a world where clients were trying to diversify their investments to now a world where they're also trying to diversify their booking centers. So our job is to provide optionality to those clients, and obviously Switzerland is an interesting hub because we are in the business of trust, and trust is a function of a few things: expertise, for one; second, intimacy, and how well you understand your clients' needs. And I think the long tradition of Switzerland in wealth management, in dealing with successions, in dealing with family governance. Provides that level of discussion that we can have with ultra high net worth clients. And last but not least, trust is about reliability. And therefore, you want a home to custody your assets where you have a stable government, a strong currency, a strong regulatory framework. And that's what Switzerland can provide.
If Laurent, there had been a temptation for some wealth management business to gravitate toward the Middle East before this happened, do you think some of that comes back to Europe now?
It might. It might come back to Europe. It might go to Asia. But we're going to see wealth being mobile again.
And I mean, in a increasingly fragmented world, is there also? I mean, I guess wealth is mobile. But it's also aware, I suppose, of the dangers of putting money in places where it might become out of reach at any point. Is that something? Because we talk to businesses about supply chain resilience. I wonder if those with wealth are thinking about the resilience of the supply chain of that money, being able to keep getting their hands on it.
Yeah, exactly. And this is exactly my point about diversifying your booking centers. You don't want to put all your eggs in the same basket. So we see a lot of clients, wherever they are serviced, trying to book their assets in different places.
And different currencies, I suppose, it flows from that. De-dollarization was a theme we talked about a lot in January, February. Yeah. That really went away when we saw that the dollar, it is still a haven in the month of March. But where do we stand on that conversation?
Long term, we might see a bit of de-dollarization coming back in. We think that, if you're sitting outside of the US and you believe that structurally the dollar is going to be eventually weaker, for different sets of reasons, then you might want to diversify away from the US. The imbalance between foreign investors in the US and US investors investing abroad is around $26 trillion. So you just need a little bit of rebalancing for that to have an impact on the markets. And when we talk to our clients who have been for a long time now overweight US assets, and rightly so, they're starting to consider rebalancing out of the US towards emerging markets, towards Europe. Obviously, the recent crisis have put that a bit on hold, but they're still considering it, whether we're talking about public markets or whether we're talking about private markets.
Okay. Laurent, thank you very much. Thank you for joining us. Laurent Ramsey, a managing partner at Pictet Group and chairman of Pictet Asset Management. Coming up on the programme, the US and Iran explore the prospect of further talks as Israel and Lebanon meet at the negotiating table. We'll be hearing from RUSI Senior Research Fellow on this subject. That's coming up next. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
I think Iran has learned through this war that while the nuclear card that they had, that was their leverage against the world, right? If you don't do what I say, I may be crazy enough to go to nuclear weapons, right? That was always the threat. When I was in the White House and I was in the State Department, I think they realized that costs billions of dollars. One $20,000 drone hits one tanker and we control the whole straits. So I think this is a card they don't want to give up. They're going to control it, even if they open the straits.
That was the TWG Global Managing Partner, Amos Hochstein, speaking to Bloomberg at the HSBC Global Investment Summit in Hong Kong, reflecting on his backstory in US politics, of course. Let's get more on the situation in the Middle East. The US and Iran are looking to arrange a second round of peace talks before the ceasefire deadline expires next week. This as Israel and Lebanon hold their first direct negotiations in more than 3 decades. Joining us now is Bershu Ozshilik, who is a RUSI Senior Research Fellow for Middle East Security. Bershu, thank you very much for coming to talk to us. What prospect then for a deal? We did not see success at the peace talks that took place over the weekend. The ceasefire has still held, but it's rapidly coming to an end. So what kind of optimism do you have about the ability of the US and Iran to find a peace agreement over the next few days?
Well, I think the clock is running out and there's a great amount of pressure on both sides to arrive at some type of agreement, whether that is one that we can call a durable peace settlement. I think that would be rather far-fetched. What's more likely is a conditional or phased approach that might emerge over the next few days during talks that take place in Islamabad or another venue. I think there is also some speculation about where the talks might take place. But overall, it is positive that diplomacy has been ongoing. There's been great momentum by regional actors in the Middle East. We had the Quad previously meet in Islamabad and elsewhere and discuss the possibilities of what a diplomatic pathway might look like. That, of course, is Saudi Arabia, Egypt, and Turkey and Pakistan. So there is still a door that's been left open. We do not yet know how Tehran might respond to the offer that J.D. Vance said they left on the table. But there are still points of great disagreement between both sides, as well as points that now appear to be bridgeable.
Okay. And yes, one of the areas of disagreement that's been much cited by the Americans has been around the development of nuclear weapons. That seems to be the focus for the US president, Bershu. Do we see common ground there? Because sometimes we hear talk about weapons themselves, other times about uranium enrichment and what's going to be allowed. I mean, is there going to be any kind of agreement on that front?
Well, it's difficult to say. It's largely because President Trump's, the goalposts have moved repeatedly since the start of the operation on the 28th of February. But the main sticking point now appears to be the issue of suspension of Iran's nuclear enrichment program. It's been reported that J.D. Vance, the negotiating team, suggested a period of 20 years, whereas the Iranian negotiating team was able to offer a timeline in single digits. That could be up to 9 years. Again, these are still issues that are being floated publicly. We don't know precisely what the posturing positions have been behind closed doors. The other issue, of course, in addition to the nuclear program, is what happens next with the Strait of Hormuz. The one issue that is, I think, fundamental, but may be left out of negotiations as far as we know through open source reporting, is what Iran might be willing to concede on its ballistic missile program, as well as its support for armed groups or proxies across the region. And bearing in mind, these latter points are those that matter significantly for Gulf states as well.
Yes, and thinking about the proxies, could this whole thing be thrown off course by the conversations between Israel and Lebanon? Those are ongoing, but on a slightly separate track.
Again, I think overall it's positive that the government in Lebanon and Israel are in direct negotiations. This is a landmark moment. It hasn't, direct talks haven't happened in decades, so it's significant. I think from a strategic diplomatic point of view, it's also the United States and Israel trying to extract that card, that leverage from the Iranian government, the card that they have, the influence that they have over Hezbollah, and engage in direct interaction with the Lebanese government to work on a pathway of disarming Hezbollah, potential normalization in the future. But we're very far from the possibility of that reality where things are now with Israel's ongoing military operation south of the Litani River, which has been hugely destructive. But there are simultaneous tracks being pursued at the moment. We're seeing what typical of President Trump's practice. I think the military option, the blockade of Iranian ports in the Strait of Hormuz, alongside diplomatic pathways or attempts, Israel, Lebanon, as well as potentially the next round of talks in Pakistan.
Okay, Bershu, thank you very much. Thanks for joining us. Bershu Özçelik, RUSI Senior Research Fellow for Middle East Security. Really good to get your perspective on the developing situation. Still ongoing, of course, in the Middle East, even as markets try to look to other areas. Coming up then, we'll talk about bank earnings. JP Morgan and Citi post record revenue numbers, while Wells Fargo misses. We had quite divergent share price reactions to the US.
조용히 금이 가던 밤 아무도 모르게 흘러가 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이제 나 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이제 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔놨어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
watch Bloomberg 10
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is The Pulse. I'm Anna Edwards, live in London. Now, Europe's most valuable company, that is, of course, ASML, has raised its full-year sales forecast after a surge in global AI spending. Bloomberg's Charlotte Hughes-Morgan joins us now from Amsterdam with some details. Charlotte, good morning to you. So what do these results then tell us about the state of AI rollout? Because they matter for this business, but they also matter more broadly for the markets.
Yes, thanks, Hannah. I mean, as you mentioned, we saw ASML up its full-year forecast and now expects between 36 billion euros this year to 40 billion euros. I mean, this is really the continuation of a story we've been seeing since the start of this year and even before. AI demand continues to boom. You've got ASML management actually saying, the demand for AI chips continues to outstrip supply. ASML is saying, its customers are ramping up capacity. You've got TSMC, ASML's largest customer, Samsung, SK Hynix. So, these companies across the AI ecosystem in memory chips, in logic chips, they're all pouring money into ramping up their assembly capacity. And ASML says, it's working with customers to make sure that it can also meet this demand. But the bottom line is, this AI infrastructure spending, this AI demand just continues at pace, and ASML is saying that we're well positioned this year and beyond to capitalise off that.
Yes, a really positive commentary around demand for chips more broadly, wasn't there, from ASML today, Charlotte? But what about the Chinese dimension here? The company's largest market last year was China, but of course there are restrictions and talk always of restrictions and what they can do in China. So what's the latest there?
Yeah, this is a really important story for ASML, and we saw net system sales to China fall to around 19% of ASML's total system sales, and that's down from 36% last quarter. And this is something that ASML had guided for. They said you'd see this stabilization, this drop-off in sales to China. And as you mentioned, ASML is actually already under significant export restrictions to the country. It's never been able to sell its most advanced chip machines, so the systems it sells are a few generations older. And then, of course, we saw recently in the US draft legislation put forward to further tighten those export restrictions to China. And that would, obviously it's in its early stages, but that would potentially curtail ASML's revenue from China, which is still a significant market for the company despite the kind of drop-off we've seen this quarter.
Charlotte, thank you very much. Thanks for the analysis. Bloomberg's Charlotte Hughes-Morgan joining us there from Amsterdam. Let's go from Amsterdam to markets or companies listed in Paris. Hermès plunging this morning as sales missed analyst estimates. The Birkin bag maker has been hit by the disruption caused by the conflict in the Middle East. For more, we're joined by Bloomberg opinion columnist Andrea Felsted with thoughts on Hermès and beyond. Good morning to you, Andrea. So what are your takeaways then from Hermès in a Birkin bag or any style you like?
I think this has fed into a broader concern about Hermès. The shares have really, fallen around 25% over the past year. They've really derated. They're on a forward earnings of about 33 times. Their 5-year average is 48 times. You can see how much they've fallen back because there's a real worry is other designer labels we've had this incredible reset of designers, lots of new creative directors. Hermès is still doing the same as it did. We've seen the resale values of the Birkin and Kelly bags actually moderate from the peak in 2022. That's sort of in line with the luxury boom and bust and in line with the values of Rolex and other, highly traded, coveted assets. So there's questions about is Hermès really as immune and really untouchable exactly as we thought, and this has fed into that really.
Because yes, and maybe that's the backstory in people's minds going into these numbers today then, because you mentioned this a couple of days ago. There could finally be some competition. Where do we look for that?
Well, where we look for it is Chanel, and obviously they're not listed, so it's quite difficult. But we've seen all the pictures of people, the frenzy for the bags. Dior, LVMH just said Dior was selling well. They're probably the two places, and that are the competition.
Okay, and then let's talk about Kering, because there the focus is on Gucci. And I think the share price reaction, well, in fact, it's, still negative, down by 8.8% over at Kering. I mean, this is under new design control, right?
Exactly.
The Gucci brand, and yet we're not seeing it deliver just yet.
Exactly. There's two things. They had the new CEO, Luca de Maio, in September, and the shares had an incredible run. Investors thought he's going to, come in and transform Kering. He's done a lot of the early, obvious things to do, renegotiating the Valentino deal, real estate deals, selling the beauty business. So I think investors got a bit ahead of themselves. Then we had all the frenzy over Demna and he was going to turn it around. I was always very sceptical. I think he's the wrong designer. Clearly, they said they're selling well, good reception, but there hasn't been the frenzy over Demna from consumers that there has been over Chanel. There's not the buzz. So I think it's going to be quite tricky with Gucci still to turn things around.
Still difficult to turn things around. And I mean, are you surprised at how negative the share price reaction is, Andrea, given we kind of saw the Middle East drama coming for these businesses?
Yes, I thought actually LVMH was pretty solid. LVMH was, yes, it was disrupted. Fashion and leather goods wasn't great, but China going in the right direction, the US going in the right direction. US still good for Hermes, but perhaps China not as strong as for the others, because Hermes was quite resilient in the downturn, so it might not have as much of a bounce, but still it feeds into these broader worries about the brand.
OK, Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted. Coming up on the programme then, let me tell you about some of the interviews that you can catch here on Bloomberg TV. Francine Lacroix will be speaking with Megan Green from the Bank of England's Monetary Policy Committee. You can catch that interview at 3:15 p.m. London time. Of course, big gathering of all of these central banking professionals over in Washington. Also later today, we'll be speaking to the Bundesbank president and ECB Governing Council member, that is Joachim Nagel, about the ECB's outlook. You can catch that interview at 4:30 p.m. London time. Up next, it'll be Bloomberg Brief. This is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Good morning. It's 5 a.m. in New York, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks hold at an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand. And the last stretch of big bank earnings. Bank America and Morgan Stanley are on deck today. Let's take a look at futures. They're higher again after a big rally yesterday pushed us all the way to 69.67. So 1 point shy of an all-time closing high yesterday in the cash session. Today in futures, we're looking at slight gains here on S&P, slight gains for the NASDAQ as well. The small caps looking at a red arrow, but really everything's pretty much unchanged here. The focus, well, here you can see Treasuries 375, 425, and 485. You can see the 10-year coming up just far less than 1 basis point. The focus of the world, though, obviously remains on oil, as Iran reports that a ship has got through the blockade, although that hasn't been verified by the U.S., and we haven't verified it independently either. Brent crude right now trading at $95.38. NYMEX crude down to $91.37. A little bit of a green arrow there, but we had such a drop yesterday that this makes sense. Gold at $48.19 a troy ounce. For some of the single stock stories that we're watching this morning, let's get out to London and Chloe Melee. Chloe?
Good morning, Matt. Let's start with a couple of tech companies in the green today off the back of some AI collaboration. So Broadcom expanded its partnership with Meta to deploy AI infrastructure, and GitLab expanded its partnership with Google Cloud for AI agents. And so those two expanded partnerships are being welcomed quite warmly by the market, and we have got both Broadcom and GitLab move higher in pre-market trading today, especially GitLab up almost 8%. Moving on to Robinhood, which is also in the green today. It is reacting to the SEC approving plans to remove these restrictions on day trading activity by smaller investors. And we are up more than 6% this morning in pre-market trading for Robinhood. We had the head of brokerage at Robinhood saying this was a significant step towards opening up this for retail investors and empowering retail investors. And of course, that is very good news for Robinhood as a retail trading platform, and therefore we are up there. And finally, Hermes over in Paris is down quite significantly this morning after sales disappointed investors. The magnitude of that share price reaction can also be explained by the fact that Hermes is traditionally quite a resilient company within that luxury sector, and so we are down more than 8% today.
Chloe, what is going on with the luxury houses? I mean, Hermes, Kering with Gucci, LVMH, have they all disappointed?
Yeah, they're all disappointed. So we had LVMH on Monday and then Kering last night, and all of them have said really that they've been badly affected by the war in the Middle East. So that has led to lower demand in kind of key Middle Eastern shopping hubs like Dubai, but then also there's been weaker consumer confidence, travel disruption that's really reverberated across those different markets. So for example, fewer Middle Eastern shoppers going to those Paris Hermes stores or LVMH stores, and so they've been really affected by that conflict, and that's really had an impact across growth for all of those luxury groups.
All right, we'll keep an eye on the bag makers. I know Ferrari, often talked about in the same breath with those companies, is out with earnings in the beginning of May. Chloe Melee there with a look at your stocks. Coming up this hour, more on this equity market with JP Morgan's Jack Caffrey, and Stephen Bigger of Argus Research joins us on bank earnings later this hour. But first off, President Trump once again saying he sees the end of the war with Iran in sight.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. But we'll see what happens. I think they want to make a deal very badly.
U.S. CENTCOM Commander Brad Cooper posting on X earlier, quote, a blockade of Iranian ports has been fully implemented as U.S. forces maintain maritime superiority in the Middle East. Joining us now is Jumana Bersetchi in Dubai. And Jumana, it's not hard to believe that the greatest military on earth retains superiority, but the Iranians are reporting that they've got one ship through the blockade. What do we know?
Yeah, so we've sort of been micro-analyzing various shipping movements through the Strait of Hormuz since the U.S. introduced their own version of the naval blockade that was just over, I'd say, 40 hours ago now. We did get that update from CENTCOM, you just showed it there. They say that the blockade has been very successful and that 6 merchant vessels actually turned away and went back to these Iranian ports on back of U.S. instructions. And I should just add that there are no hostilities, okay? There hasn't been any military escalation around the Straits, which of course is what some people were fearing when it went to effect on Monday afternoon. But in terms of the ships going through, remember yesterday we were keeping a close eye on one of them, the Rich Starry. It seemed to have made it through the Strait, but then it stopped and seems to be returning back now. So again, unclear where its final destination is. And earlier, a couple of hours ago, the Iranian state media is saying that one of their own vessels actually managed to successfully transit through. That, again, has not been verified by our own shipping colleagues and also by other satellite imagery. But what we have detected is there is a sanctioned vessel that is sailing alongside that Rich Starry vessel that could potentially be the one that Iran is referencing. But again, at this point, it is a bit of conjecture, and we don't fundamentally understand whether it had some link to an Iranian port before making the transit through the Strait. The bottom line is that the U.S. are exerting this pressure politically, but then also economically on Iran as well. And the reason they're doing this, Matt, is to lay the foundation for the second round of discussions. They want to wrest this leverage point away from Iran with the hope that if they do meet again in the next coming days, Iran will be more open to making some of those concessions that the U.S. have been pushing for, especially because the target here is to cut off a key economic lifeline for Iran, given 90% of their economy relies on oil exports that pass through the Strait.
Right. Although, I mean, we had lifted sanctions on Iranian oil. So for the first 40 days of the war, Javier Blas estimates they were making $175 million a day, as opposed to the $100 million a day they were making before the war at lower prices under sanctions. So they have made a windfall at the beginning in terms of economics. But as President Trump says, and obviously you've seen very clearly, the U.S. and Israeli bombing campaigns have really decimated their military forces. Jumana Bersetchi in Dubai, really appreciate your reporting on this. Let's get over to Washington, where Treasury Secretary Scott Bessent remains optimistic that President Trump's original tariff rates could be reinforced this summer.
We had a setback at the Supreme Court in terms of the tariff policy, but we will be implementing or conducting Section 301 studies so that the tariffs could be back in place at the previous level by beginning of July.
Joining us now is Washington Deputy Bureau Chief Laura Davison. The tariffs have been one of the key pillars for President Trump, obviously, in his campaign and in the beginning of his presidency to raise revenue. And he did raise a significant amount of revenue in the first year of those tariffs. How does it look right now, Laura?
So that Supreme Court decision that knocked down a lot of those tariff policies really, put a big hole in this tariff wall that Trump was trying to build. Average tariff rates on imports into the U.S. fell from about 16% down to about 9%. So Bessent there was mentioning that the U.S. is looking to rebuild that brick by brick. The fact of the matter is though the Trump previously was able to just sort of unilaterally go out and say that he was imposing tariffs on a certain country or a certain type of good, effective essentially immediately. Now the White House has a much more arduous process to implement some of those tariffs. They need to show that there's a national security concern or a labor practice concern or some other reason that they need to implement this tariff. They have to go through and do a study. They have to then go through and implement. So the fact of the matter is that they just have both fewer tools as well as much more arduous, slower to implement. So beginning of July, is technically possible, but as the administration has been distracted with Iran and other issues, seeming less and less likely as the weeks go by.
American consumers and corporate shareholders have been paying for these tariffs, and there was always kind of the light at the end of the tunnel that President Trump might be cutting stimulus checks with the revenue. That's something he talked about a lot in his first year in office. He hasn't said much about it lately. In fact, he actually has said that we can't even afford now to pay for child care, Medicare, and Medicaid because of the war that he went into in Iran. What can we hope for now, Laura, in terms of stimmies?
The stimulus from the tariff revenue is, I would put it at 0 to not likely at all. This is one thing that Congress would have to implement, and Congress has said that they're not going to do that. The other fact of the matter is the U.S. still runs massive budget deficits, and this tariff revenue only addresses a small piece of that. So there's a lot of concern, both from Republicans as well as Democrats, who say, look, if we're going to be, putting this money, we should be addressing debt and deficits, not putting it back out to the people. But this is, sort of one of those ideas that sounds great on a campaign trail, sounds great at a rally. It's a way to get voters energized. But when it comes to the actual practicalities of this, the math also shows that with the amount of tariff revenue raised, we're talking, tens of dollars per household, not much to really even make a difference.
Laura, thanks very much. Laura Davison there, Deputy Bureau Chief in Washington, but currently, as you can see, in Hong Kong. Turning now to tech, shares of ASML climbing in Amsterdam after boosting sales forecasts. Surging global AI spending helped fuel demand for its chip-making machines. Bloomberg's Neil Campling joins us now for more. So the AI story helping ASML, and they're not hurt by the higher memory costs that we're seeing hurting other people in tech today.
That's right, Matt. ASML creating the machines that are required to create the chips. So actually where the memory crunches will lead to higher ASML orders. So ASML raised their guidance for the fiscal year to basically as much as 40 billion euros for the year. Now, the midpoint is in line with where the street's at. So the stock isn't moving much on a one-off basis, but the demand trends are there. The CEO spoke early on this morning about how demand continues to outstrip supply. And how many times have we heard that in the AI and the chip race in recent months? So ASML stock is up 120% over the last year. As a European basket of AI winners is up 40% over the same period. So ASML has already been massively outperforming the sector for AI stocks.
So people still buying those chip-making machines. What about the cell phones on which we all use AI? For the first time in years, we actually saw a drop across industry shipments, didn't we?
We did. IDC data out this overnight suggesting that we've got a mid-single-digit decline in the first quarter of this year, primarily because of the component cost increases. Now, IDC are saying actually that the risk is this is going to get a whole lot worse this year. And of course, Q1 is a lower number in terms of the appetite for smartphones than we see traditionally into the holiday season, particularly in the US. Now, the worry is that they have said that in some components and in some markets, the component costs have increased by as much as 50% already, that the risk is this is going to get a whole lot worse. So we're going to need some massive new devices, perhaps, to help stimulate demand. So let's hope that that new iPhone flip phone makes it to fruition this year, as many hope.
Hey, as we get closer to the U.S. Open, we're still over 4 hours away, but I'm looking at Avgo, Broadcom, one of the biggest companies in America, making another chip deal on the AI front. What do we know?
So this deal is an extension of an existing relationship that they have to create these computing units called TPUs, and it's really to help Meta to reduce the reliance on the NVIDIA ecosystem. Now, whilst they use NVIDIA and they also use AMD, the relationship with Broadcom is going to accelerate further, and clearly what they've seen through testing suggests that they like the results, so they're going to look to create their own custom silicon solutions to be much more deeply embedded in their solution systems for the next few years. So it's another tick in the box, if you like, for these technology developments, these AI compute powers, and we're seeing lots of, whether it's in compute or whether it's in quantum, whether it's in TPUs and GPUs, we all love an acronym, of course. There's just huge amounts of developments every single day in the tech space.
All right, Neil, great to get some time with you. Thanks so much for joining us, Neil. Campling runs our tech coverage for us out of London. Let's get to some of the other top trending stories on the terminal this morning. PIMCO buys all of the $400 million of bonds issued by a Blue Owl private credit fund. The bonds were priced to yield 6.5%, were rated Baa2 by Moody's and BBB- by S&P, the lowest investment grade rating. It is unclear if PIMCO will hold on to them. Representatives for PIMCO, Blue Owl, and Morgan Stanley, which was the bookrunner for the offering, declined to comment. A New Jersey congressman is looking to roughly double the cap on state and local deductions to $80,800 for married couples. Democrat Josh Gottheimer unveiled his plan that would lift the cap from its current level of $40,000, the ceiling for both single and married filers. Gottheimer is a co-chair of the bipartisan SALT caucus, which capitulated last year, and that's why we still have a cap and a limit on who can take those caps. Global shipments of Stellantis surged by 12% in the first quarter, led by high demand in North America for new Jeep and Ram models. Shares of the company are gaining after an otherwise disappointing quarter. The stock has been this year's worst performer among its peers after a massive record-breaking write-down. Coming up, the last two major U.S. banks set to report earnings this morning. What to expect next? This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
On the consumer side, spending's been very resilient, through the last month. It's still up year on year every week. People are certainly spending more on gas than they were, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
Two more big banks have earnings due today. Morgan Stanley and Bank America will report in a couple of hours. Let's bring in Tom Metcalf to see how the week has gone and what to expect today. Tom, first off, on the earnings that we have seen, Goldman Sachs, JP Morgan, Citi, Wells Fargo. How does the report card look so far?
Yeah, look, broad brush, pretty reassuring. No sort of really awful skeletons in this closet. I mean, the interesting thing for me yesterday was JP Morgan. My gosh, those traders really blew it out of the park. and yet you still had Jamie Dimon, putting his bearish hat on and giving a bit of kind of downbeat guidance about potential risks out there. But if you just look at the hard numbers of JP Morgan, all seems rosy in the world of Wall Street. At least now they've managed to navigate the crazy volatility, all these big macro points. And then it was really interesting to just hear then the Wells Fargo CFO talking about, again, even for a Wells Fargo whose results were a little bit more disappointing, they missed estimates, basically just saying, look, the consumer right now in the US is pretty resilient. So today, Bank of America, Morgan Stanley, and I think they'll sort of tell tales of the tape on either side, right? Morgan Stanley will be looking at how the capital markets business is doing. Bank of America, I always look for that, again, that sort of picture of the US consumer and if there is any signs of distress there.
The trading business is going to be one that we watch closely after Goldman Sachs had a record in equity trading. As you mentioned, JP Morgan traders pulled in, I think, over $11 billion in the quarter for a record as well. There have been, though, some worrying signs. Goldman Sachs missed by a lot on FICC trading. What do we expect from Morgan Stanley and Bank of America?
Yeah, that miss is looking more and more unusual when you compare it to what JP Morgan and Citi were able to do yesterday. So, look, I think for Morgan Stanley, that's the question is which camp are they going to be in? Kind of interesting if they're in the Goldman camp, because then you start to think, oh, okay, is it JP Morgan and say a Citi taking share? And also with Morgan Stanley, I always look very closely at those equity traders. Traditionally a real big area of strength for Morgan Stanley, so it'll be interesting to see how close they can come to the Goldman equities traders, who, unlike their FICC brethren, did a very good job there, really smashed through their estimates.
Tom, thanks very much for the update. Bloomberg's Tom Metcalf covers banks for us out of London. Don't miss our exclusive interview, by the way, with Morgan Stanley's CEO, Ted Pick. That's on my television program, Open Interest, at 10:30 a.m. New York time. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for your front page news. First up on the New York Times, Vice President J.D. Vance taking issue with Pope Leo's comments and invoking World War II to defend the U.S. bombing of Iran. Vance, who is Catholic, spoke at the University of Georgia.
I think that it's important, in the same way that it's important for the Vice President of the United States to be careful when I talk about matters of public policy, I think it's very, very important for the Pope to be careful when he talks about matters of theology.
Next up, the Washington Post reporting that U.S. Attorney Jeanine Pirro has asked federal prosecutors to wipe out the seditious conspiracy convictions of 12 members of the Proud Boys and Oath Keepers who helped plan the January 6th riots. The request is likely to be granted, would wipe out the last remaining convictions related to January 6th. Coming up, J.P. Morgan's Jack Caffrey seeing earnings further accelerating this year. He joins us next. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Good morning, 5:30 a.m. in New York City, 10:30 in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. 2 more days. President Trump once again says the Iran war is close to over. U.S. stocks holding near an all-time high. And AI euphoria. Investors pour into Anthropic for a new round of funding. ASML boosts its guidance on surging demand, and the last stretch of big bank earnings. Bank America and Morgan Stanley on deck today. Let's take a look at what's going on with futures this morning after gains yesterday. Really little change on S&P and NASDAQ futures. The small caps moving down a little bit more significantly, but as I say, yesterday we closed the session, the cash session, at 69.67, which is 1 point off of an all-time closing high. Treasuries also doing a whole lot of nothing this morning. The 2-year yield actually moving up 1.5 basis points to 376. The 10-year yield at 426 and the 30 at 486. Let's take a look at oil. The global focus today moving up a little bit more, but we have come down so sharply from NYMEX crude at one point hit, I think like a little over a week ago, $117 a barrel, and today we're looking at $92.60. Brent at $96.04. You can see gold there at $4,800 a troy ounce. For some of the single stock stories that we're following for you this morning, let's get over to Chloe Melee. She's in London. Chloe?
Good morning, Matt. Quantum computing stocks are on the rise this morning after NVIDIA unveiled new AI models that are aimed at accelerating progress within quantum computing, essentially helping researchers build and develop new quantum models and processes to develop across a range of applications. And so this is really driving gains across that sector this morning. And in particular, D-Wave Quantum is up almost 9% in pre-market this morning. Moving on to Robinhood, which is reacting very positively to the SEC going ahead with removing restrictions on day trading activities by smaller investors. And so we have the head of brokerage at Robinhood saying that this will really is a significant step towards empowering those retail investors. And therefore, we are up about 6% for Robinhood. And finally, Hermes is not doing so well this morning in Paris, really taking a hit after really disappointing sales following in the footsteps of LVMH and Kering. So the luxury sector as a whole really struggling because of the war in the Middle East and the impact on sales. And now this really raises questions about when we will get that luxury rebound, that luxury recovery after those disappointing updates from all 3 major luxury companies.
All right, Chloe, thanks very much. Chloe Melee looking at some of the single stock stories for you this morning. Let's get back to tech. One of the single stock movers that we're seeing rise again today is ASML after the chip-making equipment manufacturer boosted its full-year sales forecast. Surging global AI spending obviously helps fuel demand for those machines. Joining us now is Bloomberg's Shona Ghosh. Shona, what do we know about ASML? I mean, it seems that demand is always more than supply in this AI chip-making game.
Good morning, and yes, it is, as we're in this current big AI infrastructure boom. You have that demand flowing through to chips that power the AI data centers and AI models, and then in turn, sort of lower down the chain, you have the demand for ASML's tools, which are integral for manufacturing chips such as NVIDIA's Blackwell structure, for example, and all the other cutting-edge AI chips that are all surging into these data centers. And ASML is the only company that makes the machines that can make the most cutting edge chips. So it has the stranglehold on the market, and the longer the AI boom goes on, the better position that ASML will be in.
By the way, Avgo, Broadcom shares up in the pre-market here after a deal with Meta, another deal with Meta. What do we know about that contender?
I think it's, overall, it's all about continued confidence, just because in the background, we have worries that at some point, that the music might stop and some of the spending will slow down. But at the moment, the sign is that, from the hyperscalers like Meta, there is renewed confidence, ongoing confidence in the amount of AI capacity that we need, compute capacity. And so tie-ups like Meta and Broadcom shows, it's diversifying the chip partners that it wants. And overall, that's really good for the ecosystem to show diversification in this way. And again, we see this sort of trickle-down effect for ASML, which, as I say, has the sort of stranglehold on some of the manufacturing equipment.
Those are the publicly traded AI stories. Of course, Anthropic has occupied a really strong place in the media lately. While it is still a private company, it's drawn more investor offers to put it at a value of about $800 billion.
That's right. I think it's important to note that doesn't mean that Anthropic is going to accept these offers. Ultimately, this is about investors piling in the months, probably, before the company considers listing, which means it will be open to everyone. At the moment, there is pent-up demand for a share of Anthropic, in the strong belief that as and when it does go public, the share price will boom. So you have this rush of investors coming in saying, we really want to get into Anthropic before it lists, and it's driving up that valuation, again, showing confidence in the company after a few questions about whether it's running into a bit of a kind of compute shortage because it hasn't sort of spent money on capacity in the same way as some of its competitors, but clearly that's not bothering investors.
Right, there's a certain mythos surrounding Anthropic. Shona, thanks so much for joining us. Shona Ghosh there covers tech for us. Let's get to JP Morgan's Jack Caffrey. He weighs in on earnings this earnings season, writing, quote, "We see earnings further accelerating this year, and with the more material earnings gains happening away from the concentrated AI-related equities." I'm pleased to say he joins us here on set, dark and early this morning, equity portfolio manager at JP Morgan. Jack, so I want to get to the rest of the market, but just because of this slew of AI news that we have again today, how do you see that juggernaut of spending going forward?
Well, right now it seems that despite the capital spending announcements going up 50%, 70%, hundreds of billions of dollars, we still have shortages. And I think that enthusiasm feeds to investors, which gives them that willingness to continue funding, trying to resolve some of these shortages on a compute basis, which creates what's been sort of a virtuous cycle, but admittedly a very concentrated virtuous cycle. And I think when we start talking about companies spending $600 billion, $700 billion, I think we have to keep in mind that one company's spending is another company's revenues. And I think that's the lever to how we get away from just a focus on the Magnificent Seven towards the broader market. And hopefully we will stop talking about the forgotten 493 and talk just about the S&P 500.
I mean, some of these companies have had a bumpy ride, right? Microsoft at one point had lost a quarter of its value year to date. It's now coming back. NVIDIA had been down year to date. It's now up about 5%. Amazon had been down year to date. Now it's back up about 7 or 8%. Are these companies, I mean, at worst, are they a safe haven in times of trouble? When you see a war in the Middle East and a doubling of oil prices, do you think, like, that's a good place at least to hide?
Well, I think for the last, call it 3 years, really, we've had this ongoing battle between the cyclical and the secular. And it really hasn't been much of a battle because the secular have largely massacred the cyclical up until, call it really the summer of last year, when I think investors began asking about that second derivative. How possible was it you would start seeing 50% growth turning into 100% growth? And I think that led to, to borrow from a technical term, a consolidation in terms of time more so than price. And then coming into this year, you began hearing some wrinkles of inflation coming back to life. And I think that makes those companies that are too reliant on their earnings 5, 10 years from now becoming a little bit less valuable out of war, and then suddenly energy becomes the hottest thing to own. Apparently no one told energy traders yesterday because they were aggressively selling that as we lean into the most recent sort of set of policy pivots that are coming out.
What do you think, by the way, will be the result of the jump that we've seen in the underlying commodities? Crude, obviously, it's not $120 anymore, but 95.
Well, there's been some interesting talk if 85 is the new 65. And I think I mentioned that because about a year ago, you would have seen most oil company investments being underwritten about a belief that long-term oil prices might have been $65 a barrel for WTI. The U.S. is in a relatively insulated position, given that we more or less are not only the largest oil producer, but actually a bit of a modest oil exporter. But we wind up being a refined products importer, particularly here in the Northeast. And when we start thinking about where our gasoline might go over the summer, if it's not clear if Europe isn't getting as much oil as they'd like, if we'll be getting as much gasoline as we want.
I mean, we hear all the time that we're in an insulated position, but we still have to pay for this oil, whether we produce it here or not, right? And especially if other countries come and start buying it all up, bidding up the price, yet it doesn't seem to be denting earnings expectations.
I think in the shorter term, it hasn't really dented earning expectations. You are seeing companies, recognizing rhetoric matters. You're not talking about price increases, you're talking about surcharges. But I can think of one company 2 weeks ago, we're going to put through a 7-10% surcharge as we better understand what's going on. I think investors are looking at surcharges, that's a price hike. I think customers are hoping that surcharges are effectively temporary and that we're going to find some way to navigate through this. But you certainly see, the Cleveland Fed survey of inflation expectations nearer term pushing something closer to 5%. You put that with real GDP growth that seems to be slowing, certainly over the past quarter. The last 90 days, the Atlanta Fed survey has gone from 5% to call it 1.5% in terms of what real GDP is now. Oddly enough, that winds up giving us similar nominal GDP than we might have been thinking about this year, and financial assets are nominal. So if I can get 7% sort of top line, people might think that's pretty good. It just might not be the composition of the top line we wanted. It might be more price than volume.
So what do you see then in terms of actual corporate earnings? I mean, there are really some astounding numbers, especially considering that we've been going like this for a while.
I think an investor underestimates the U.S. corporate sector's ability to drive profitability at their peril, and certainly at their likelihood of losing out. I think what's even more impressive as we look back over the past year, companies have had to deal with the uncertainty around what tariffs might do to their supply chain, what their capital spending decisions might look like under the one big beautiful bill. And as a result of that sort of uncertainty, your bias is to sit on your hands. I don't have the luxury of being able to sit on my hands. I'm supposed to be mindful and thoughtful in responding to that uncertainty. Now we have an excursion in the Middle East, which may be over tomorrow or it may drag on. We'll certainly hear more policy pivots, I think, more likely than not as negotiations extend. But I'll come back to, and I have the luxury of having 35 analysts supporting me across large and mid-cap sort of securities. And when we look through their annual earnings forecast, it winds up being a high teens growth rate versus about 11.5% last year. So companies are finding a way. And I think that's ultimately what we have to lean into as an equity investor. I start as an optimist, and I want to come back to companies will find a way to make money.
All right, really smart analysis, Jack. I appreciate you joining us this morning. Jack Caffrey there of J.P. Morgan Asset Management. Now let's get to the other top stories trending on the terminal this morning. The Washington Post is reporting that the Pentagon is sending thousands of additional troops to the Middle East in the coming days. They would include troops aboard the aircraft carrier USS George H.W. Bush and several warships escorting it. The Pentagon and U.S. Central Command declined to comment on the troop movement. U.S. Treasury Secretary Scott Bessent tells British media that the Iran war is worth a small bit of economic pain. The statement comes ahead of his meeting today with his UK counterpart, Rachel Reeves. Earlier this week, Reeves told The Mirror she is very frustrated and angry the U.S. went into war without a clear exit plan. New York Governor Kathy Hochul is backing a New York City tax on second homes worth at least $5 million. It aims to raise $500 million a year by levying a yearly surcharge on the multi-million-dollar pied-à-terres. The tax plan, I should say, is a compromise between Hochul and New York City Mayor Zoran Mamdani, who has pushed for higher taxes on the wealthy and large corporations. Coming up, we'll catch up with Stephen Bigger of Argus Research as we count down to earnings from Morgan Stanley and Bank of America. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
On the consumer side, spending's been very resilient, you know, through the last month. It's still up year on year every week. You know, people are certainly spending more on gas than they were, you know, before the conflict started earlier in March. But if you look in aggregate, it's about 3% of spend.
All right, we're 4 down, 2 to go in big bank earnings. Morgan Stanley and Bank of America set to report before the bell. Let's get to Stephen Bigger, Director of Financial Institutions Research at Argus Research. Stephen, let me first get your take on what we've seen so far. I mean, Goldman Sachs had awesome equity trading, but a huge miss on the FICC side, and it looks like it may have been an outlier.
Yes, good morning. Certainly did seem to be. Goldman uncharacteristically weak in FICC trading relative to expectations, but as you said, the equity side certainly did, you know, very well. We're looking at, you know, record quarters for a couple of these banks in terms of because of the volatility, the trading volatility that we've seen, particularly in March. You know, we had volumes up something close to 30% from prior year, so very strong quarter there.
What do you expect from Morgan Stanley and Bank of America today? I mean, are they going to be publishing these massive trading numbers, the likes of which we've seen from J.P. Morgan and others?
Well, I think so. Yeah, Morgan Stanley tends to do, you know, quite well there. But I think what's grabbing a lot of the attention as well is the investment banking side. So we've had so far 20 to close to 50% increases in the investment banking side. And, in particular, we're just seeing a surge of M&A activity. IPO activity, for what it's worth, has been picking up. Not quite to the level that we expected, and certainly some pause here maybe with the Iran conflict. But yeah, capital markets have really shown their ability to shine in this environment.
Yeah, we saw a big jump in investment bank advisory revenue at a couple of these banks. Goldman Sachs, top of the league table. JP Morgan, number 2. Morgan Stanley, number 3. Bank of America is way down the list, I think at number 9. Do you expect any moves in that table this year?
Well, not particularly. These banks all are extremely competitive and tend to get the best deals. You look at SpaceX, for example, coming out this summer, likely to be the biggest IPO ever. There's 20 investment banks that are working on that as underwriters, so that will get spread around. The one that very much intends to try to grab some market share is Wells Fargo. Now that the asset cap has been lifted, they are pretty far down beyond just outside the top 5 banks, but they do plan, because of now their ability to engage corporates with financing and grow the balance sheet, they expect to grow some market share there. Who they take it from is not particularly clear, and this is not a 6-month or 1-year type endeavor. They're looking out the next 3 to 5 years and trying to get a little more share, but I think they're in a good position to do that, coming from kind of an underdog position right now.
Yeah, I see Wells Fargo at number 12, right after UBS. Stephen, when we talk Wells Fargo, I think automatically of the private credit story. Not that it's going to be a systemic issue, but it's one where we're starting to see investors question bank exposure. What do you make of the private credit story, and will we hear about it today again from Bank of America and Morgan Stanley?
Well, we heard a lot about private credit, obviously, coming into the quarter, and we heard a lot about it yesterday in the conference calls as well. And this is one area where bank managements have just not seen the signs that there's a lot of risk or exposure here. They have scoured their portfolios, their balance sheets, looking for exposure, particularly in the software space, which has been the one most highlighted, and they just don't see it. In many cases, they've actually broken it out, added some additional disclosure in their presentations about that. We're looking at senior lending being better than 98% here in some cases. We're looking at the defaults just not coming through. So I think we have, this is a case where we had a weaker player in the industry that took some risks, that being Blue Owl, and resulting in some defaults there and some worries by investors and redemption rates higher than the 5% allowed. So that's put a kind of a bad name to the group. But I'm encouraged to see some rebound in the names like Apollo, KKR, Blackstone, which I do cover, in the recent week, and after banks have come out and said, look, they don't think this exposure is that much to worry about. The headlines, are just a little bit more than what they're seeing live on the ground with these portfolios.
Stephen, great to get some time with you. Thanks so much for joining us. Stephen Bigger there of Argus Research, talking to us about big bank earnings. Tune in to our exclusive interview, by the way, with the CEO of Morgan Stanley. Ted Pick joins Open Interest at 10:30 a.m. New York time. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York City. Let's get a look at what's ahead today. First up, as we've been telling you, Morgan Stanley and Bank America are reporting earnings before the bell. Then we're going to get some Fed speak from Barr, Hammack, and Bowman throughout the day. By the way, I should mention on the subject still of Morgan Stanley that the CEO, Ted Pick, joins Bloomberg Television exclusively at 10:45 Eastern time, so tune in for that. And then in terms of the stocks that we're watching, Avgo, Broadcom is moving higher in the pre-market, as you can see, deepening its ties on chips with Meta. GitLab gains in on expanded Google Cloud partnership, so GitLab is up almost 8% in the pre-market, and D-Wave Quantum rising more than 8%. Quantum stocks are set to extend their rally after NVIDIA unveiled a suite of new open source AI models. In terms of the macro picture, S&P futures are unchanged right now after hitting almost an all-time high yesterday, 1 point away. Crude back up a little bit, 92.38 a barrel, and Brent trading at 96.27. That's it for the brief. Surveillance is up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The earnings story still looks very much on track.
You have a situation where the fundamentals actually got stronger.
There is still a lot of uncertainty out there.
This uncertainty can pass. I still think there's a very good road ahead.
The bull market that started in October of 2022 has further to go.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday within striking distance of all-time highs. Equity markets bouncing back almost 10% from last month's lows as the White House is teeing up peace talks in the next few days. Attention turning to wrapping up quarterly bank earnings on Wall Street. Morgan Stanley and Bank of America up next.
The themes so far have been trading and banking on fire. Look, whatever you can say about what's going on geopolitically, volatility has been a good thing for these banks, and you see record quarters coming out. Morgan Stanley should benefit from that. Bank of America might be the more interesting aspect of this. A read on the consumer. So far, the look has been resilient in the face of higher oil prices. Do we hear the same tone coming from the leadership of Bank of America?
The market reset has been absolutely remarkable. A 10% move off the lows for equities, a 20% move off the highs for crude. The Strait of Hormuz still largely closed. This market has moved on.
The Strait of Hormuz is closed. That blockade, according to CENTCOM, is fully in effect. But the president indicating to a number of reporters yesterday that he is prepared to wind this down. And this comes ahead of reports that potentially we can get as soon as this weekend another round of peace talks. I thought it was interesting, though. The vice president yesterday, J.D. Vance, said the president wants a grand deal, a grand bargain. How long is that going to take? And at the same time, the market is completely ignoring this Washington Post report that more troops are headed to the region.
In the meantime, how much damage has been done? Check out the earnings. LVMH, MS. If you have got exposure to the Middle East consumer right now, you're getting hammered. Elsewhere, look to the US, to the banks, Citi, Wells Fargo, JP Morgan. Pick your bank right now. Ask for commentary on the consumer. Consumer still earning. The consumer is still spending.
And frankly, a lot of them point to the fact that earnings and inflation have increased much more than gasoline prices. So when you get a gasoline price that's close to what we're seeing now, or above $4 a barrel, $4 a gallon, a lot of the consumers can withstand that. Yesterday, the Bank of America consumer survey came out with respect to spending on cards. The same kind of tone that we've been getting all along, this idea that there is resilience. So at what point does it become painful? You know, you hear caution in these executives' tones simply because they have to, because it seems irresponsible if they don't. But it doesn't seem like they actually feel like the economy is turning over.
For the short term, though, for the luxury brands Jonathan mentioned, there is some serious pain. These Middle East shoppers are not showing up to some of these stores, and that's what we heard from Hermes when it comes to stores in France or Switzerland or the United Kingdom. And this idea of having that scarcity that Hermes is known for, well, it doesn't work if your shoppers can't even travel to get to the destination.
That is not a problem for the S&P 500. And that's the issue for this equity market. Semis have ripped 20% so far this month. You want to talk about a valuation? $800 billion possible valuation of Anthropic. So this market's going to be wide open potentially for an IPO later on this year as well. All of that's lining up to benefit the likes of Morgan Stanley, the likes of Bank of America when they report later this morning.
Yeah, the idea that Anthropic is getting the offer of a valuation of $800 billion, and they might $800 billion, and they might turn it down because they might not want to raise this round of funding. The idea that they could IPO in October. This capital market is wide open. And say whatever you will, there has been a leadership shift. You talk about this with the semiconductors and how they're up almost 30% in the past 10 trading days. There's also ASML coming out and actually raising expectations because still the investment in big tech is ongoing at an existential risk.
What did Jim Zelter say over at Apollo? Take a walk. In 6 months, we'll be talking about that. We won't be talking about all of this.
I'm walking a lot. I'm getting really sweaty.
You're touching grass? You're feeling good?
Just out there touching grass in the park. If you see me, just know, Jim Zelter sent me.
Equity futures on the S&P this morning, just about unchanged. Coming up this hour, we'll catch up with Noel Dixon of State Street with stocks on the brink of record highs. Susan Bell of Rystad Energy as optimism grows over an end to the war. And David George of Baird with big bank earnings in full swing. We begin this hour with stocks sitting near record highs as a relief rally takes hold. Noel Dixon of State Street writing, despite heightened uncertainty in the Middle East, investor positioning and flow data clearly suggests positive risk appetite is still alive and well. Noel, good morning. It's good to see you. Is there good reason to get behind this rally?
I think so. I think there's, to be honest, there is an awful amount of good news already priced in. However, I do think it can continue. I think the question is, after this situation has occurred, do we go back to the trade we had on before, or is it going to be something a little bit different? And I think, what our perspective is that we're going to be left with a situation with higher commodity prices. And then the question is, does everyone lose, or are we going to have winners and losers? And we're more of the latter train of thought. And we think that there's going to be more opportunity to be more selective. And we think that, the U.S., for example, it's hard to argue that they're not going to be more insulated from a terms of trade perspective. And there'll be some more weakness in other regions like the UK and Eurozone. So I think you have to be a little more selective.
Well, let's stay within the United States and get selective there. Pre-war, semis were doing well, software was not. Post-war, for the month of April, semis have ripped, software has struggled. Do you expect that to continue?
I do expect it to continue. I think the hardware, the semi story is undeniable. There's a lot of demand. I think software, we're trying to sort through what are going to be the disruptions from places like Anthropic and different companies. But, our perspective is that, we think, it's still going to be more of the same, and we don't see any reason to really change that perspective.
It seems like the leadership has very much been big tech, has very much been the semiconductors, as John mentioned, when you look at the sigh of relief being breathed by the entirety of markets. How much do you need to see corporate executives talk about actual efficiencies, actual gains coming from some of the deployment of AI to justify the ongoing rally?
Yeah, so I don't know if we need to see immediate justification. I think it's a clear race, I think, between the U.S. and China, both, I think, militarily and I think from a commercial perspective. And I think the perspective is that that's going to be ongoing. I think earnings right now, 12 months forward, it's about 30%. So it's really hard to get negative, especially after we had the correction that we did. So I think, right now, we do eventually need to see some revenue, but the demand is so significant, especially in the hardware space, that I think it still instills confidence in investors to move forward.
When I think about the demand coming from AI, and then you think about the fact that commodity prices, as you just said, will probably be higher, why has everyone moved on so quickly from this inflationary story that could potentially pressure yields higher and could create a really difficult situation for central bankers?
Well, when I think about the inflationary pressures, I think you also have to think about the growth side. So I think when we think about valuations, for example, and the support from an interest rate perspective, I think investors are skeptical that central banks will be able to hike as much as being priced in. So we would push back on that. So I think the growth aspect is going to keep central banks largely in check in the background. And again, we'll have to deal with inflationary pressures, but that was to my point earlier. There's going to be winners and losers, and that's where I think you have to be selective.
Is there also winners and losers when you look globally? Because the energy shock is really still hitting Asia and as well as Europe, and we're not feeling it as much in the United States.
Yeah, so I think it's definitely going to hit Asian countries. I think about South Korea. I think about Japan. They import 90% of their energy. But again, that actually brings some opportunity. So the baby will get thrown out with the bathwater. I think the Asia tech trade, there'll be some opportunities there, down the road as we get these corrections. But no question, I think Asia's very exposed. And as I mentioned, I think Europe is very exposed.
What would it take the market to care once again about the conflict? I mean, the Washington Post this morning is talking about sending thousands of additional troops. We always say, look at what Trump does also, not just what he says.
Sure.
But the market seems to be ignoring any sort of escalation.
Sure. So I think you need to separate two things, the nuclear agreement and I think opening of the Strait of Hormuz. From a market perspective, they're focused exclusively, I think, on the Strait of Hormuz. Keep in mind, for example, the JCPOA agreement with Obama, that took about 2 years to sort. So that's not going to get, I think, resolved anytime soon. It'll take some time. But the Strait of Hormuz, there is incentive, I think, for all sides to try to find some resolution. And I think that's what the markets are sniffing out and looking forward to.
And that's the carrot for the market right now. The president recorded an interview earlier this week with Fox News, getting some headlines from that conversation just moments ago. Maybe the end result will come soon, Bramo. And on the blockade, no pushback from the Saudis. There was some suggestion that there might have been some pushback from the Saudis. Not seeing that in these comments this morning.
No, and talking about how he sees the end as being very close, an ongoing sort of edification of what you're seeing in markets with respect to this sort of seamless effort toward a ceasefire. Look, I mean, Emery is not wrong when she raises skepticism. And I mean, I respect the Debbie Downer. I respect the fact that you can cast some cold water on this because, frankly, this conflict is not over. And you talk to any geopolitical strategist, they say the world has fundamentally changed. But the market has said, ultimately, to the degree that it's changed, we've moved on. President Trump seems to be leaning on to that, given the fact that higher markets seem to support him.
The world also has fundamentally changed, and so has Iran. I think the president always says there is a new regime, not regime change, just change within the regime. Actually, these are hardliners as well, and they're going to come with the same hard lines to the negotiating table that their predecessors have. Also, what's interesting is Trump says that China had no pushback on the Hormuz blockade. I think that is incredibly interesting because China is the one that, of course, buys all the Iranian oil that the U.S. is now trying to stop.
Crude this morning, Brent crude at 95.80 at the front end of the futures curve, WTI at 92. The president saying that oil will be down to the levels it was and maybe lower. Now, I know the presidential jawbone can be effective, but that is quite an effort to jawbone this market a little bit lower.
The only way that could actually transpire would be if there was serious demand destruction on a mass level. And that would require some sort of decline in economic growth. But right now, based on the fact that you've had more than 10 million barrels a day taken offline and not coming online anytime soon, it seems unlikely unless you get some sort of serious slowdown.
No, you get that one. Oil will be down to the levels it was and maybe lower. Noel Dixon, your response to that?
Yeah.
Don't fancy it?
No, I don't fancy it.
Noel Dixon, the State Street there. No, thank you, buddy.
Thank you.
Appreciate it. Let's get you an update on News Worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. The U.S. and Iran are looking to arrange a second round of peace talks in the coming days. Sources telling us here at Bloomberg the objective is to hold more discussions before a ceasefire expires next week. One proposal is to return to Pakistan, though other venues are being considered. Israel and Lebanese officials meeting for the first time in more than 30 years for high-level talks in Washington. The Israeli ambassador calling it, quote, a victory for sanity, even as officials play down hopes for an end to the war with Hezbollah. And prosecutors making a surprise visit to the Fed's offices this week amid the DOJ's investigation into Fed Chair Jay Powell. Sources telling us here at Bloomberg officials tried to enter the construction sites but were denied entry because of clearance protocols. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, the White House teeing up peace talks.
I think it's close to over here. I mean, I view it as very close to over. We'll see what happens. I think they want to make a deal very badly.
Up next on the program, we'll catch up with Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The rally stalling out just a little bit, unchanged so far this morning on the S&P 500, unchanged on the NASDAQ. But what a move we've seen so far this month. Only one down day so far for the month of April on the S&P 500, a rally off the low of about 10% and within striking distance of all-time highs on the S&P 500. Now that's at the index level. If you look at the energy sector has basically wiped out all of the gains on the S&P 500 that we saw through the month of March. That's amazing.
Especially given the fact that oil prices haven't come down to where we were before March. So ultimately, people are looking at this and saying it's pretty much a wash for them, given the fact that they've got destruction to some of their facilities in the Middle East, and they're not necessarily going to be profiting so much more from high prices. The market is treating this as though it's a blip, and we can all move on.
Brent crude at 96 right now, WTI at 92. Under surveillance this morning, the White House teeing up peace talks.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
So here's the latest this morning. The president signaling he's ready to wind down the war in Iran, saying peace talks could restart in the next 2 days. Bloomberg's Tyler Kendall has the latest from Washington. Good morning, Tyler.
Hey, John, good morning. Well, our reporting maintains that both sides are seeking another round of in-person negotiations ahead of next Tuesday's ceasefire deadline. But that means that things have to get going quickly because President Trump indicated earlier this week that the timetable for a deal has not changed and suggested in an interview yesterday that he may not offer any sort of extension. There are signs that Iran is potentially trying to avoid some escalation here, at least in the short term as well, as Bloomberg News reported yesterday that the country is considering a temporary halt on shipments and maritime activity that could violate the U.S. blockade. Though at the same time, Iranian state media did report last night that an Iranian supertanker made its way through the Strait of Hormuz, though that has yet to be confirmed by the U.S. Instead, we got a statement overnight from CENTCOM saying that all commercial traffic to and from Iranian ports has been halted. As we're getting more details, a U.S. official telling us that the military is stationing its vessels in the Gulf of Oman instead of directly near the strait in a bid to give the U.S. more flexibility. This blockade isn't the only means of pressure that the U.S. is looking to deploy ahead of potential dialogue, including the Washington Post now reporting that additional troops are being sent to the region, and the U.S. Treasury threatening additional secondary sanctions on any financial institutions that aid the country. John, as you all know, this comes after yesterday the Treasury announced it was not renewing that 30-day waiver for purchases of Iranian crude already at sea. But I will point out that Bloomberg News is reporting new this morning that nearly 4 million of those barrels just arrived in India ahead of that waiver expiring. This after just yesterday, Indian Prime Minister Modi called President Trump about the war in Iran as we get these more headlines that the president has been speaking to world leaders about this, including breaking in the last few minutes. President Trump saying that China hasn't taken issue with the strait being closed so far.
Tyler Kendall with the latest in Washington. Tyler, thank you. Tyler's right. According to the president, China hasn't pushed back. The Saudis haven't pushed back. Moments ago, it's starting to sound like the Iranian military is pushing back.
Right, the Iranian military is saying that the United States needs to get out of the blockade, and potentially what they have continuously said is there will be escalation because of this. They had said that if you block our ports, we are going to go after your partners' ports in the region as well.
To discuss, joining us now, Colonel Wayne Sanders, the Senior Defence Research Analyst at Bloomberg Intelligence. Colonel, welcome back to the programme, sir. How fragile is this ceasefire?
It's pretty fragile. I think if you look at the next 24 to 48 hours, Iran's responses are going to be key here. The first 24 hours in the blockade, I'm sure it's just Iran trying to be able to figure out where they can position forces necessary if they need to respond. And so I think a lot of the tell there is going to be on whether or not any of those strikes actually take place over the next 24 to 48 hours against some of the Gulf states, as well as U.S. military bases in that region as well.
Would Iran do this within the Gulf of Oman and the Strait of Hormuz, or would they actually try to get the Houthis involved in the Red Sea?
I think they could do either one. I think that if they get the Houthis involved, obviously it gives them a little more plausible deniability in the region. But when they keep things localized, if they're trying to keep it U.S. focused, they're trying to keep it against what we're doing on the blockade, then they're going to want to have some type of show of force against either U.S. or anybody that they're trying to escort through.
What do you make of the fact that the Pentagon, according to the Washington Post this morning, is sending 1,000 more troops to the region?
So, I mean, I think that one is obviously it's a leverage that that the president can use, but also on the military side, it could be to shore up additional boarding and interdiction teams, which could be part of the blockade. Seizure and inspection of vessels actually takes quite a few people to do that. The 11th and 13th Marine Expeditionary Units are very good at that, but if these are reinforcing of that, it might also be hardening bases in the region. So I think the real tell there is going to be what type of logistics follows along. If it is a lot of Army logistics, you might be looking at more of hardening of the U.S. bases in the region. It might also just be something along the lines of military Sea Lift Command, which are the ones who actually provide kind of a conveyor belt of resources and fuel and all that to the ships in the region. That could also be a play in this as well.
Colonel, I've seen a lot of commentary from different officials talking about who holds the cards. It seems like everyone's talking about that. Is it the U.S. holding the cards? Is it Iran holding more cards? What's your sense of the points of leverage right now heading into further negotiations at a time where we still pretty much seem to be at a stalemate?
Yeah, so the military normally looks at it. There are four levers of national power. You have diplomatic, information, military, and economic. So on the diplomatic side, both sides are trying to apply that same level of pressure to be able to do it. On the information campaign, I would say Iran normally does pretty well on that because of the asymmetric threat. They don't have to strike a whole lot. They just have to have something on fire to be able to create some chaos in the market and create chaos around the world. Militarily, the U.S. is dominated in that region, but the IRGC does have capability. And then economic, you've seen a lot of these pieces play out over the last month as well.
How much do you really see China playing a part in this? We know that President Trump was saying that China did not push back regarding the blockade. There are questions and there have been reports about China supplying weaponry to Iran, potentially even a new air missile defense system. What's your sense of what the reality is and what's fiction?
Yeah, I find that very, very hard to believe, especially if you're talking about exquisite air defense systems, because these things aren't small, and the U.S. has eyes in and out of Iran pretty much across the board. So you're not going to see some large, aircraft coming in that's dropping off these types of supplies that's not going to require a U.S. response. So I think that's probably one of the biggest ones. I've seen other reports that are dealing with a lot more of the smaller shoulder-fired weapons. While I still think that's very risky for China to do, because if it is attributed back to them, and there is a lot of proof there, that obviously puts them in a worse position on the national stage. But if they are trying to smuggle those in, those smaller type weapons, those shoulder fire Stinger type missiles and things of that nature, those types of weapons are small enough to be able to get through onesies and twosies, but you're not going to be able to put it together at the level of the air defense systems that some of the reporting is putting out there.
It's not just weaponry, though. The Financial Times this morning saying Iran used Chinese spy satellite imagery in these companies to target U.S. bases. At the same time, the president seems to be striking more friendly tone with what Beijing is saying to Washington. How concerned are you about how much China is really helping Iran and targeting U.S. service members?
So, when it comes to China, I know we had that talk earlier about Russian intelligence, supporting Iran as well. I think part of it we all need to remember, too, is that a lot of that is dual-use technology that could be tied to China's civilian side, as opposed to dealing with the Chinese People Liberation Army or the Ministry of State Security or anything like that from that perspective. So I think that it is definitely being leveraged. I think that Iran is going to use anything and everything they possibly can. And because of how good technology with satellites has become, even on the commercial or on the military side, it has allowed an advantage, a technological advantage for pretty much everyone to catch up somewhat to the technological advantage of the United States when it comes to satellite imagery.
Colonel, you're in a different seat to the seat that a lot of people on Wall Street are sitting in. They're focused on markets and the comments coming from the president. It's an anticipatory asset class. Basically, they're seeing the president looking for an off-ramp. This market's moved on. What guides you, away from presidential statements, what guides you and your thoughts about how things are progressing?
I would probably say when I look at the military strikes against some of the Gulf state neighbors, that is something that has started to wind down, obviously, during the ceasefire. It went from 149 strikes the day before the ceasefire down to 7. You saw a handful of upticks a little bit during each of the times, but not to the same level that it had been for the first 4 months. So I think, or excuse me, 4 weeks. But what I continue to look at right now is some of the logistics tail, where we're actually going, the transition of the U.S. military into the types of weapons that they're using, and then at that point in time, also the response for some of the other folks in the region, the Gulf states that are playing a part in this and starting to put additional pressure. I think all of those are good telltale signs that things are moving in the right direction. But Iran having an asymmetric threat is always that card that they can play at that last second.
And that threat certainly still lingers. 4 weeks felt like 4 months, without a doubt. Colonel, thank you. Colonel Wayne Sanders there of Bloomberg Intelligence. And what guides him and how he's thinking about this war?
Yeah, and right now it seems like it's less bad news also on the geopolitical front. Things are not escalating or getting worse. And that's the reason why Wall Street is moving on. There are frictions, though, that are going to be long-lasting. And this really is the ultimate question. The Strait of Hormuz may never be open again the way that it used to be. What does that look like? And the fact that people have kind of moved on is notable given the potential inflationary pressures.
People have moved on, but we should note the shock in Asia is really getting very, very dire. Right now you have Pakistan that is dealing with controlled blackouts in the evening because they want to make sure they're controlling the price of electricity. For the first time ever this morning, India received Iranian crude barrels. Well, guess up. That waiver's ending, and this blockade means no more oil's coming
We've seen that rationing across Asia. It's been brutal for them, I know. Coming up on the programme, we'll catch up with Susan Bell of Rystad Energy with crude trading back below 100. Plus, Yahira joins us. She's got your morning movers. Broadcom rising on a new chip partnership with Meta. That stock is up by 2.5%. Live from New York City, you're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We are wrapping up quarterly bank earnings on Wall Street this morning. In about 15 minutes from now, we should hear from Bank of America, Brian Moynihan and the team. In the next hour, we should also hear from Morgan Stanley, Ted Pick and the team at 7:30 Eastern Time. Bramo catching up with Ted Pick later on this morning, so look out for that in the 10 o'clock hour, I believe, Lisa.
Yeah.
A little bit later this morning.
And really, the key questions that everyone has is how big is that pipeline? How much can capital markets remain open? The other interesting note is how much all of the executives have completely dismissed private credit concerns. They're all coming out and saying, ultimately, this is not systemic. We have it under control. I expect the same there. And then just going forward, how much are consumers really feeling the heat, given the fact that ultimately they had a lot of spending power going in and Americans like to spend?
Ted Pick catching up with Lisa later this morning. Don't miss that, 10:45 Eastern Time. Your equity market at the moment pulling back just a touch on the S&P 500, negative by a little more than 1/10%. On the Nasdaq, down by 0.2. What a run on the Nasdaq. 10 consecutive days of gains, the longest run since November 2021. That little bit of weakness this morning, some headlines moments ago from Iran pushing back on the blockade and really exposing just how fragile this ceasefire might be.
The Iranian military spokesman, according to Iranian state TV, is basically saying that this constitutes a breakage of the ceasefire terms. They also say if it continues, Iranian's armed forces, the IRGC, will not permit any exports or imports to continue through the Persian Gulf, the Sea of Oman, or the Red Sea. Basically saying we are going to go after all of these other parts of our proxy regime that have been dormant for the past 6 weeks.
That's boosting crude this morning, up by 1.8% on Brent, on WTI. Both of those contracts, the front end of the futures curve, closing below 100 for 5 consecutive days now. That's bringing this market just a little bit of comfort, but a boost from the headlines we've seen in the past 15 minutes. They're the scores. Let's get you some single names, some morning movers. Yahara has more. Morning, Yahara.
Hi, John. We start with Broadcom. Those shares are rising 2.6% as the company expands its partnership with Meta, building custom AI chips. It's part of a multi-billion-dollar effort to build out more than a gigawatt of computing power. And it speaks to something larger that we've been hearing from guests, that the AI build-out is alive and well. Deals still getting done. We keep hearing about them, even as this market grapples with the Middle East. We are also seeing shares of Nike moving higher in the pre-market, up 2.3% on a show of confidence from the top. Board director Tim Cook and CEO Elliott Hill buying the stock, putting about $1 million to work. It's a show of support as Nike goes through this rough stretch, but we've seen this type of buying before, and the stock is still down some 30% year to date. And we end on shares of Robinhood rising 4.25% after a big shift from the SEC, the agency approving changes that remove key limits on day trading, including that $25,000 minimum balance. So it's now easier for retail traders, retail investors to trade more actively, and that is a boon for the likes of Robinhood, since retail makes up such a large portion of its users. John?
Yahara, thank you. Thanks for the update. More from Yahara in about 15 minutes' time. On our radar this morning, President Donald Trump suggesting talks with Iran could resume this week. A ceasefire between the two nations expires next Wednesday. The president did not say if Vice President J.D. Vance would continue to lead negotiations. Elsewhere, the Treasury Secretary, Scott Bessent, saying the global tariff struck down by the Supreme Court could be reinstated.
We will be implementing or conducting Section 301 studies so that the tariff could be back in place at the previous level.
by beginning of July.
The president imposing a temporary 10% tariff following the High Court's decision, the levy set to expire July 24th. And finally, Anthropic drawing investor offers that could value the company at more than $800 billion. It's not clear if the AI startup will accept investor terms. Anthropic previously discussing a listing as early as October.
Yeah, in the last round of funding, Anthropic was valued at $350 billion. That gives you a sense of more than the doubling that this $800 billion valuation comes into play. And it comes after the Mythos experience that we all had, which I just want to add, it's really notable that after Anthropic came out and said, we're going to release something only to a couple people because it's so dangerous should it fall into the wrong hands, guess who's doing the same thing? OpenAI. They're about to roll out something only to a few people because they too have something. Guess what? We too have something that could be dangerous, so watch out.
Right, so they come out with this thing that everyone wants their hands on, and now it's like, oh, wow, their valuation is so much higher. I find the U.S. government relationship with Anthropic right now fascinating. On one hand, they're fighting intensely with the DOD, and we had the Undersecretary Emil Michael on after he basically said that Dario Amandi had a God complex. Then the Treasury Secretary last night hailed what Anthropic was doing and calling it a revolutionary step that'll keep America ahead of China.
This industry has such a huge branding problem right now that they need to address. And it's exacerbated by the leaders in the positions that they are at the companies that you talked about. And I'm not sure what they're going to do about it between now and the IPO. I'm sure the kind of comments they make at the moment help increase the valuations of their firms going into those IPOs that people expect later this year. But it certainly doesn't help consumer attitudes, and I would say attitudes of the electorate at large towards these companies. And that could expose them further down the line when the people that represent those electorates will be setting the regulation around those companies and the taxes they'll have to pay as well.
Yeah, and not to tie too many things together, but this is also related to the recent disruption that we're seeing in energy markets because energy bills are already going up. And then if you think about how much electricity costs are going to go up for any regions that are tied to some of these big hyperscalers, that's going to become increasingly a political issue.
Let's turn back to the energy story. Crude rising after Iran warned the US against continuing its naval blockade, saying it would violate the terms of the ceasefire. Susan Bell of Rystad Energy writing Hormuz will reopen. But the question is how much pain the market absorbs in the meantime. Susan joins us now for more. Susan, good morning and welcome to the studio.
Thank you so much.
Let's get into how much pain we're experiencing right now. Just describe what's happening in physical markets.
Well, the physical markets are extremely stressed, and I think, a lot of focus is on the ICE Brent price, but the ICE Brent price is a cash-settled market, right? It's not a physically settled market, and really, if you want to see what the pain is, look at dated Brent. And dated Brent premiums to ICE Brent are in the order of 25. Yesterday, the market closed out with dated Brent at, I think, $30 higher than ICE Brent. So the true physical markets are extremely stressed.
Do you expect that to turn around anytime soon? Because this market, and when I say this market, this equity market has moved on really, really quickly.
Right. No, I don't. I mean, we really do need to see flows establish out of the Strait of Hormuz before the physical markets can start to rebalance. I think the reason why the financial markets, the crude oil financial markets have been relatively stable over the past couple of days is that we have yet to see Iran retaliate. Now, the U.S., the Pentagon yesterday said that they successfully blocked four vessels, or at least 4 vessels turned around on their command. But then there's conflicting news coming out of some of the ship tracking agencies that are saying, well, actually, there was one vessel that was loaded at an Iranian port that was able to get through the blockade. So, there's a lot of really conflicting information out there, and so far Iran has not retaliated. But the news this morning that they do intend to retaliate if their trade does get blocked, that would amp markets up all over again.
Let's say there isn't a massive escalation, that things kind of stay where they are for a number of weeks and then slowly get a little bit better. Yeah. Does it make sense to you that December dated contracts for Brent are at $82.49?
It does. If there is not a massive escalation and if the Strait of Hormuz takes its time to reopen, it does make sense that dated Brent or that the Brent contract is so elevated in December, because what's happening right now is we're digging a hole in inventories. And when the supply recovers, a lot of that volume has to go back into restocking, right? So it's not that we're going to see the markets collapse the minute we start to see flows coming out of the Strait of Hormuz.
I thought you were going to say that it should be a lot higher. So that was where I was kind of heading. So that's sort of one of the questions that people have. We're focused very much on the oil and the energy space. Is that the real disruption that you think is going to be truly problematic for the global economy? Or do you think that some of the other disruptions, whether it's agriculture, whether it's the metals sector, could be potentially worse?
I think that, energy is it's almost a human right. And that is going to be the most painful impact of all of this. But I do believe that there is, if we don't start to see something happening in the ag space, the fact that fertilizers are so expensive and effectively unavailable for some nations because it's unaffordable, this could move into food scarcity. Which is very concerning.
Well, what about things like LPG, which India needs to cook every single meal?
Absolutely, and LPG is a significant issue, particularly for India. They had resolved their immediate concerns by negotiating transit for vessels through the Strait of Hormuz, and of course, the Trump administration is saying they are not going to block navigation for trade that is not tied to Iran, so India should still be able to get their LPG. But of course, if Iran retaliates, that upends everything. And if Iran retaliates and the Houthi get involved and start to impact that flow out of the Red Sea, that puts even more pressure on Asia because so much of their crude oil is coming from that direction now.
This morning, India actually got 4 million barrels from Iran from that general license that the Treasury had 3 weeks ago. They were unsanctioning Iranian oil at sea.
Yes.
How long does it take for a ship to go from the Strait of Hormuz to a port? Basically meaning if its blockade really started in earnest yesterday, when do you think we could see even more physical disruption?
So I think the average days of transit from the Strait of Hormuz into Asia is 15 to 20 days. It depends. I mean, if they're going all the way to China, it's longer. India, it would be shorter. Asia has already seen the fact that they're not getting any oil right now. There was oil on water through the first 25 days of March, but now there's no oil on water.
Susan, it's good to see you. Thanks for dropping by. It sounds like a doom and gloom conversation relative to the enthusiasm elsewhere in the stock market, but this is real. That's what's happening in physical markets right now.
Well, that's the reason why, as much as you feel doomy and gloomy, I think a lot of people are on the same page. It's just that markets are saying, what is the pain threshold in which the global economy can move on? And people are taking the most rosy scenario at face value.
Susan Bell there of Rystad Energy. Susan, thank you once again. This headline from AP just crossing that mediators are moving closer to extending the US-Iran ceasefire. That headline crossing just moments ago, that mediators are moving closer to extending the US-Iran ceasefire. Some conversation about that in the last week. We'll keep an eye on that. Crude still elevated, close to 97 on Brent. Earnings from Bank of America just around the corner. Before we get there, let's get you some top stories, some headlines with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump signaling he's ready to wind down the war with Iran. Trump telling U.S. news outlets that peace talks could resume in the next 2 days. The president saying Iran now has a different, less radical regime. A confirmation hearing has been set for President Donald Trump's nominee for Fed Chair. Kevin Warsh will face the Senate Banking Committee at 10 a.m. next Tuesday. Senator Tim Scott expects the DOJ to drop its investigation into the Fed's renovation project, clearing the way for Warsh to be confirmed. And Snap is laying off roughly 1,000 full-time employees, or 16% of its global workforce. In a memo to employees early this morning, the CEO said the cuts are necessary for Snap to boost efficiency and profitability. He also cited improvements in AI technology that let Snap employees move more quickly. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, mixed results from the big banks.
There is still a lot of uncertainty out there, but should the hostilities in the Middle East start to die down and we get this resolved sometime in the second quarter, that points to a very healthy second half of the year for the banks.
In just a moment, we'll break down the results from Bank of America with David George of Baird. Plus, we'll get you the latest on a US-Iran ceasefire. AP reporting that they agree in principle on extending that truce. More on that headline and the latest results from Bank of America in just a moment.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We've got two things to do here, the latest on Iran and the US, and then we'll break down the results from Bank of America as well. Let's start with the latest on the US and Iran. This from AP moments ago. They've given, in principle, an agreement to extend the truce. The latest from the US and Iran, according to AP just moments ago. So, in the equity market, there were some very small losses. We've erased them. We're just about unchanged on the S&P 500. In the commodity market, there was a boost to Brent and to WTI. We've erased some of those gains. Brent crude down to about 96. WTI at 92. The truce set to expire in the next week or so, and this looks like the US and Iran is getting closer, in principle at least, to agreeing to extend it.
It's supposed to end on April 22nd, so we'll see how long that they're willing to, in this idea, in principle, extend that truce. It also comes at the time where the Pakistani Prime Minister has announced he will be making a visit this weekend to some Gulf countries like Saudi Arabia, Qatar, as well as Turkey. So for him to then go back to Islamabad, have consultations with these other mediators that have been trying to bring an end to the hostilities, this actually tracks and makes sense. It's interesting, though, this comes after the Iranian military said if you are going to continue this blockade, we view that as essentially ending of the ceasefire, and we're going to go after some ports.
The market, I think it's fair to say, focusing on one of those headlines and not the other,
yes.
given the 10% move we've seen off the lows in the equity market. I mentioned the second piece of news we need to cover, results from Bank of America crossing just moments ago. That stock is up by 2% in the pre-market. With the latest, here's Danny for more. Hey, Danny.
Hey, John. It has a similar flavor, I must say, to Goldman Sachs. That is a big beat on equities and a really large number for equity trading, but a slight miss on FICC trading. So the numbers themselves, equities comes in at $2.83 billion. The expectation was just over $2.5 billion. That is a record quarter from Bank of America when it comes to equity trading, which means their overall trading numbers, a slight miss because of a miss on FICC, $6.3 billion. That still is a record quarter for trading. FICC comes in at $3.5 billion. The estimate was for $3.8 billion. So that is where we are seeing a miss in their trading numbers. But again, it reflects a really strong first quarter for all of Wall Street, given the volatility and the results on the trading desk. When it comes to their net interest income, that is a beat too, $15.75 billion. The estimate was for $15.37 billion. It's something the company had been very optimistic about. Their co-president not that long ago was guiding towards at least 7% growth in net interest income. So we expected that to be a strong number. I would just flag what they're saying about credit. We've seen the banks, many of them for the first time, break out their private credit exposure. Bank of America, no exception in this regard, breaking out that they have $20 billion worth of exposure to private credit. That would actually put them in the smallest camp of all of the banks we've heard from so far. Just a reminder, Citi, $22 billion, Wells, $36 billion, JP Morgan, $50 billion. So Bank of America showing that they have less exposure to private credit than their banking peers. Finally, just some of the commentary we're getting from Brian Moynihan saying we remain watchful of evolving risks. However, we saw healthy client activity, including solid consumer spending and stable asset quality, indicating a resilient American economy. So something we've heard from other executives. Everything looks good for us, but there are evolving risks.
Danny, thank you. Thank you for the update. Hermes and LVMH have been beaten up in the last 24 hours, but if they've got a store near a Wall Street bank and this keeps up, I think they're going to be okay. The latest headline from Bank of America, record equity sales and trading revenue. Over at Goldman, we had a Wall Street record for equity trading revenue. Over at JP Morgan, traders posted their best ever quarterly revenue. At Citi, the highest quarterly trading haul since the financial crisis. So these guys have been busy over the past 3 months.
Yeah, the volatility has been a good thing when it comes to their returns. You did see, as Danny was saying, Bank of America missed slightly on the fixed income currencies and commodities trading. Nonetheless, still coming in with $3.5 billion of revenue versus the expected $3.78 billion. The takeaway also, very much the consumer is solid and the U.S. economy is chugging along. At what point does the volatility that's fueling trading and sales potentially stymie the pipeline that has been fueling also record banking fees? And that is maybe a tension and maybe not as people look to a brighter future for at least banks.
Let's get to David George of Baird. David, welcome to the programme. You've seen the results from some of the big players. Can this keep up? And why aren't you as bullish as some on the street are on some of these names?
Good morning, John. Thanks for having me. Yeah, these numbers look pretty good. We're kind of just processing them as you are in real time here. But as you say, they look pretty good across the board. Capital markets was very strong. We had a lot of volatility in oil, gold, silver, and rates throughout the quarter. And obviously, B of A benefited from that, as did some of the other money centers. In terms of the stocks, there was a window to buy a couple of these maybe at the beginning of the war, and we upgraded a handful of the regional banks during that period of time. But we still think that the risk-reward trade-off is better in some of these regional banks, like a Huntington, Fifth Third, PNC, and Citizens, for example.
And we just did see PNC, for example, report earnings and raise their full-year net interest income estimate. I'm just wondering, have we put to bed some of the concerns about private credit? Danny was talking about how all the banks are breaking out their exposure. Bank of America came out with a relatively low exposure. Their net charge-offs are lower than expected. Is there sort of a waning in interest and concern about this area?
Yeah, you know, it's really going to be headline dependent, but we've been of the view that market participants are maybe overly concerned, Lisa, as it relates to private credit. And again, I think it's important, and we heard this throughout the quarter, that the big guys and even some of the regionals were going to kind of size this private credit exposure to make market participants maybe a little more comfortable around the exposures and actually the actual size. And as these companies report, these are 1 to 2% of total loans. And again, Wells is almost a $2 trillion balance sheet. Same with B of A, and these are $20 to $30 billion loans. And again, the structures of these are also very low risk. So from our perspective, those fears are overblown. The bigger fear around credit is a function of how long does oil stay here? If oil is elevated for an extended period of time, it's a concern around the consumer potentially, as well as just how it makes its way into inflation and the impact on corporate profit margins.
David, just based on the big banks, not necessarily the regionals, and we still have Morgan Stanley yet to report, who's been the winner so far in your eyes?
Honestly, I'd say JPM and B of A probably had the best quarters. Obviously, as you mentioned, Wells had a tougher quarter. They reaffirmed the outlook for the full year, but they missed our pre-provision, which is basically kind of your pre-credit earnings number, by 4 to 5%. And I think it's also important to note that the stocks came in relatively hot. We have erased all of the war fear and losses going into earnings. So we've seen almost a 10 to 15% move in these stocks. So they came in a little hot, but we think that JP so far has had the best quarter, excellent capital, excellent core trends, and a great outlook as well.
David, always great to hear from you, and thanks for making time for us. I know how busy you are on a morning like this morning. David George there of Baird breaking down the latest results. This is what we're seeing in Bank of America. I'm very interested in how the consumer's doing right now. We've heard from a range of banks that everything's okay. Just to break out the details from B of A, consumer banking up 21%. Payments up 5%. Consumer credit debit spend up 7%. Deposits are up, loans have grown. When you look across the bank right now, that speaks to an economy that's still doing well, better than okay. And I'd say we've heard that on repeat from several banks across Wall Street over the last week.
And even when they've gotten pushback from analysts saying, what about higher gasoline prices that offset the one big beautiful bill and any kind of tax refund that people get? What they've all said, led by Jamie Dimon, is they can absorb this and then some. And what you just saw in the Citigroup consumer spending pulse, again, just really strong across the board with an expectation that even retail will start to do better.
Yeah, Brian Moynihan saying he sees a resilient American economy. They all continue to say that. What's going on in gasoline prices, potentially trickle-down effects of diesel when it comes to other products like your food, is not hitting the consumer right now, or the consumer at least is able to make these decisions and weather the storm.
Stock is positive in the pre-market by some 0.6%. One more bank to go, Morgan Stanley, in the next hour. So far, so good, though, for Wall Street. Bank earnings are fine, based on what we've heard so far. On top of that, we're looking at extending a truce between the US and Iran, based on our headlines from AP just moments ago.
The more you can take the temperature down and put that in the rearview mirror, the more people will focus on how good earnings are. And so far, so good, as you said, with respect to both the outlook as well as the read on the American consumer.
Up next on the program, we'll catch up with Beata Mathey of Citi, Ed Mills of Raymond James, Gerald Cassidy of RBC, and George Wonderland of Schroders Capital. From New York City this morning, good morning. The second hour of Bloomberg Surveillance. Up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So
probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
그날이 나를 찾아와 아무 말 없이 곁에 앉아 한참을 머물다가요 잊으려 애쓰지 않아도 조금씩 남아있는 마음으로 오늘을 그냥 걸어가요. 그때는 몰랐던 것들이 이제야 조금 보이고 지나온 시간들 사이로 나를 다시 돌아보네요. 끝내 전하지 못한 말은 이제와 꺼내보지만 그저 바람에 조용히 보내봅니다. 사라진다는 건 아마 없어지는 게 아니라 다른 모습으로 남아서 가끔씩 찾아오는 거겠죠. 그날을 안고 살아가고 흩어지는 기억들 사이로 조금씩 나를 찾네요. 이젠 괜찮다. 남아있는 온기로 오늘을 살아가요. 바람이 지나간 자리 그곳에 남아 있는 건 사라진 게 아니라 내 안에 남은 이야기죠. 해가 기울던 창가에 빛이 천천히 내려앉고 별일 없던 하루인데도 마음이 조금 남아있네요. 아무 일도 아닌 것처럼 그냥 지나온 시간인데 왜인지 모르게 오늘은 자꾸 생각이 나네요. 바람이 스쳐간 자리엔 아직 따뜻함이 남아있고 흘려보낸 줄 알았던 기억이 가끔은 다시 돌아오네요. 손에 쥐지 못한 것들이 이렇게 오래 남아서 지우려 할수록 더 선명해지는 그런 날이 있잖아요. 나는 그날을 부르지 않아도 그날이 나를 찾아와 아무 말 없이 곁에 앉아 한참을 머물다 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이제 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어. 조용히 그 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔놨어 조용히 그리 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이제야 놓아주려 해. 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸. 이게 나야 지금의 나. 더 이상 숨지 않아. 부서진 시간 위에 서서 나를 다시 써내려가. 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어. 아직 남아있는 흔적 지워지지 않는 너의 그림자. 익숙했던 아픔도 이제 나를 멈추지 못해. 시간은 흘러가고 나는 조금씩 변해가. 그날은 나를 지나 지금의 나를 만나. 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸. 이게 나야 지금의 나. 더 이상 숨지 않아. 무너진 기억 위에서도 나는 다시 나를 세워. 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어. 무너져도 괜찮아. 나는 다시 피어나. 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는데 했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이제 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이제 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이젠 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 흩어진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이젠 알아 뒤돌아보는 대신 앞으로 걸어가야 한다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 나를 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들었어 무너져도 괜찮아 나는 다시 피어나 이 모든 상처까지 나를 완성시키니까 이게 나야 지금의 나 이젠 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야 흔들림 없이 더 크게 말할게 내가 걸어온 모든 밤이 나를 빛으로 바꿔냈어 조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이젠 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너